Spoke hours after the Electoral College sealed his win. He noted that he won 306 Electoral College votes, the same as President Trump did in 2016.
At the time, President Trump called the Electoral College tally a landslide. By his own standards, these numbers represented a clear victory then, and I respectfully suggest they do so now.
President Trump offered no public reaction to the Electoral College vote. It's a grim milestone in the US battle against the coronavirus. The death toll has now gone past 300,000. Meanwhile, more than 600 hospitals across the country are receiving vaccines this week. The first shots are being given to healthcare workers. President Trump praised outgoing Attorney General William Barr for having done a, quote, outstanding job. Still, Barr is leaving office later this month, having crossed the president on two key issues: his claims of voter fraud and the investigation into Joe Biden's son. The president criticized Barr in an interview last weekend. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg.
Emma, thanks so much. Greatly appreciate that this morning. Let me do a data check now. Equities, bonds, currencies, commodities. I'm going to get right to it. The two-year yield over 3 days compresses down to 0.1170. That's sort of front and center for me, along with the real yield negative 1.00. And around that, we've got futures up 22, the VIX 23-ish. I mean, it's been a churn the last number of weeks, but there's some really interesting compressions in the bond market right now, these glide paths. We'll talk to Peter Orszag about that here in a bit. Birthday girl, what do you have?
Trading is a little bit mixed in some of the other markets, Tom. So oil is dropping from a 9-month high on concern that tougher virus restrictions could mean less travel. We're certainly seeing more travel restrictions when it comes to the Southeast England, London in Tier 3 from tonight, which means that you can no longer travel. Now, treasuries are pretty much steady. If you look at European stocks, they're pretty much flat. They were gaining earlier. And then, Tom, I know you've been missing my Brexit updates. So we know that Brexit negotiators go back to work in Brussels this week as they push to complete a trade accord before the UK leaves the European Union on December 31st. And there's a narrow path, but there is a path that tells us that, you know, we could have a deal this week.
Yeah, Kevin Cirilli emailed me yesterday on my day off and said, Tom, we need a Brexit update.
Well, there you go.
Mr. Cirilli with us, our chief Washington correspondent right now.
How about a lasagna update?
Yeah, well, we're going to get a lasagna update. We got to try the pesto thing, Kevin. Kevin, Jeffrey Rosen, Attorney General. How does DOJ and how does Attorney General Rosen fold into the pardons to come? Are they part of the discussion?
All systems a go. I mean, look, I think yesterday I was speaking with some people after the news came that President Trump accepted the letter resignation of Attorney General William Barr. And AG Barr is going to go be able to have some relationships within the Republican Party, but whether or not he does the book route and criticizes the Trump administration, that's just what we don't know. There's so much intrigue surrounding the relationship between President Trump and AG Barr.
Okay. The intrigue, Kevin, for this nation is the day after Christmas. The day after Christmas, I think the money runs out for a lot of people and their jobs. And you're Washington, where stimulus goes from 900 kajillion down to 700 kajillion, where nothing's getting done. How critical is December 26th?
Massively important. However, yesterday, the Problem Solvers Caucus, a bipartisan group of lawmakers, Tom, they gave a press conference unveiling another bipartisan proposal. But as Congressman Tom Reed put it, a Republican, that they're hoping for a Christmas miracle, his words. And so as we move forward here, this stare down has become really, quite frankly, an embarrassment for rank and file members who are going to have to return for the holidays empty-handed.
Kevin, William Barr is stepping down. How significant is this?
You know, look, I think that it is with significance. However, I don't think that necessarily it presents any major policy hurdles between now and the inauguration of President-elect Joe Biden, in the sense that what market observers will be watching for. But from a precedent-setting matter, yes, it's absolutely notable. And as Tom alluded to, this could have repercussions in terms of President Trump's pardoning power. And there's been some conversation about that. But these are two individuals who really quite honestly had a very complex relationship. And when it gets to the matter of investigating members of the president-elect's family, that I think is going to be really what was the turning point, rather, between President Trump and now former, or soon-to-be former AG Barr.
So, Kevin, where are we on the pardons?
Well, I think that the president has said that he is carefully reviewing pardons and that he is looking at them. I think that there's been this open speculation about whether or not he would issue blanket pardons, testing to some extent the constitutionality of that. But as of now, we just haven't seen that. But this would be a warning. This could be interpreted, and I don't really want to speculate, but this could be interpreted as a warning shot, so to speak, for the future of pardons.
Kevin, I want to go back to Congressman Reed. This guy's really interesting, folks. He ran for mayor in Corning, New York. He runs basically the bottom half of New York State from, I don't know, the Catskills, where Kevin goes on the weekends to hear Pia Zadora, all the way out to almost to Pennsylvania. Kevin, Tom Reed is living in the real America. Republican, Democrat, doesn't matter. Opioids are an issue. Higher unemployment's an issue. Is anybody speaking to Tom Reed's district?
Tom Reed is. I mean, he's the co-chairman of the Problem Solvers Caucus. You know, later today I'll speak with his Democratic counterpart, Congressman Josh Gottheimer, Democrat from New Jersey, another very bipartisan type of district. And look, for those districts, this is maddening, and I don't really want to, you know, I want to be careful in terms of the word choice. I don't want to, you know, over-exaggerate here, but it does bear repeating. There are parts of this country, outside of the cities, outside of rural America, that cannot understand why fiscal stimulus support hasn't come, and the mechanism of it, and what's tied it up. And this ability for grants, particularly grants for small businesses in Main Street, that's what people like Reed and Gottheimer are pushing for.
Yeah, they're brilliant, Kevin. And what was particularly brilliant is you've gone to the Faro School of Self-Promotion. The way you got your radio show into that discussion, that was as smooth as anything Faro's ever done in his life. Mr. Cirilli, thank you so much, our Chief Washington correspondent. You know, we kid about it, folks, but the truth of the matter is it is eventful in Washington. It's not just about the former Attorney General as of December 23rd. Coming up in the markets, this is Critical Conversation. Ibrahim Rabari joins us with Citigroup. The link into that litmus paper of the system, foreign exchange into our international markets. Futures up 22. This is Bloomberg.
Some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? combustion engines get electrified.
I know that this is difficult news, and I know that it will mean plans disrupted, and that for businesses affected, it will be a significant blow. But this action is absolutely essential.
If we don't change the trajectory, we're going to go to shutdown, and then your business is going to close.
Het coronavirus grijpt nog sneller om zich heen.
The coronavirus is spreading even faster than we predicted last week. That is why the Netherlands will be going into lockdown for at least 5 weeks.
There is no such legislation, such as a fine or penalty, so the only thing we could do is to ask people to cooperate. Under such a circumstance, Tokyo residents have been cooperating with us.
I just want to say that if we have too many contacts now before Christmas, then it's our last Christmas with our grandparents. Then we will have been negligent. We should not do that, ladies and gentlemen.
Extraordinary voices there in the pandemic, and clearly, as you all know, whatever your location, it has deteriorated in the last 24 hours, wrapped around the wonderful news of the courage, I should say, of first vaccine takers in the United States. It is widely anticipated. The year forward and the Fed view forward of Ibrahim Rabari. He's at Citigroup, Global Head of Foreign Exchange Analysis. Ibrahim, I want to move beyond the FOMC meeting to what the dollar will do to constrain Chairman Powell. All the textbooks, Rogoff and the others, all tell me that it's real simple. Watch the dollar, watch the global FX market. Will the dollar constrain Chairman Powell?
Francis, Tom, it's great to be with you this morning. And we don't think that the dollar is going to be front and center when it comes to Fed policymaking. We think that the historical attitude of the Fed, which is benign neglect towards the US dollar, will continue. That being said, we think that it is going to be a big year for foreign exchange, a big year for the dollar, as the dollar decline that we expect to continue is illustrating that global investors are looking past the pandemic and towards a more benign and inclusive 2021. So we do think that there is a dollar trajectory that is very significant for global asset markets and ultimately rather benign, but we don't think that the Fed will see it as a major constraint, as it pretty much sees everything on track going into the December FOMC meeting.
It may be their exorbitant privilege to stand removed from all this, but other nations cannot. Calibrate where a weak dollar begins to affect other nations, and particularly a strong euro.
Yes, so we are, in fact, we think not very far from that point. So the now more than 10% appreciation of the euro against the dollar is reaching a point where it is beginning to dampen the outlook for both growth and inflation. Of course, it is, again, a result of rather benign developments elsewhere, but it has reached the point where I think we've seen peak negligence from the ECB. So last week's ECB meeting was very telling, because what the ECB told us is that they are comfortable moving away from their level of emergency support. And even though FX featured prominently, it didn't merit for them to address it in a specific policy. And I think that will come to haunt them a little bit, because it will encourage further appreciation. And as I mentioned, we've got to the point where the euro, which we think could well be heading towards 130 over the course of next year, is going to start to weigh on exports as well as inflation prospects in Europe.
But Ibrahim, should the ECB worry about the level of euro or the length at which it gets there, so the trajectory?
I think ultimately both of them will be very relevant factors, but I think over time the level will start to be a concern. But that's, of course, against the backdrop of very fragile inflation expectations and what is still, rather fragile economic recovery. But it is true that, again, it is probably only nearer to 130 that those downside forces on growth and inflation will be the primary concern, as opposed to one of several headwinds on the horizon.
Will inflation be back, Ibrahim, and what does that mean for interest rates?
So we take a rather nuanced view of the outlook for inflation. In general, we think that, if anything, the
pandemic is reinforcing some of the structural disinflationary forces that have existed for a number of decades, including the even wider spread of digital technologies. But that being said, we think that the uncertainty about inflation is higher than it has been for many years. So investors look at the outlook for inflation, and they are pricing a significant inflation risk premium, debasement risk premium to some degree as well. So the difference between maybe the fan chart for inflation and the, I think, still very subdued outlook in the central scenario is pretty wide. But we remain with the low-inflation, subdued inflation camp globally.
Ibrahim, what is a pair that's the greatest opportunity? What's a major pair, maybe something obscure? I'll leave it up to you. Where's the true opportunity to make big figure moves?
So I would highlight two opportunities in our view. One is something that you've extensively covered on a daily basis. We do continue to be optimistic on a Brexit agreement in the UK. So in short order, over the next week or two, we think that is the central opportunity. We think that cable would be one good way to express it. I think cable could, in coming weeks, go as high as 140. And that is, of course, very idiosyncratic, but it is also leveraging off that continued dollar decline. More broadly, we think that in this environment of a dollar sell-off, we are looking for currencies that are undervalued and hopefully benefiting from the surge for carry as well. And that would probably be ruble. In the EM space, there's a very significant political risk premium that we think is pricing something close to the worst case for the outturn of US policy in the coming years. So ruble in the EM space, sterling in the very short term would be two of our favorite expressions.
Look, Ibrahim, one more thing here. We've got some breaking news we're going to run to here. But Ibrahim, one more important question. On the dollar dynamics, just simply, is it affected by fiscal stimulus at all? I mean, is your world immune to any successful outcome on United States budget stimulus?
Not at all. In fact, fiscal stimulus is a very relevant driver for us right now. But unusually, the calculus in FX currently is more fiscal stimulus means a weaker dollar. And that really has two reasons. One is it does, in general, reinforce the positive attitude by global investors. It enhances risk appetite, and that has been dollar negative. The second is, unlike in the past, more fiscal stimulus doesn't translate necessarily into higher real yields in the US because of a very dovish Federal Reserve. So more fiscal stimulus, if anything, lower real yields in the US, and again, weaker dollar. So we are watching fiscal stimulus very closely, as is everybody else.
Very good. Ibrahim Mabari, thank you so much. Greatly appreciate it with Citigroup. Just a nice overview there, folks, before this important Fed meeting. It is a transaction, and what always gets your attention is when the people from Indiana act. They look to New York and do Prevail Therapeutics, and this is a big pop, up 96% off of this at $26.50. Prevail is working Parkinson's disease, and I'm going to have to look at my Bloomberg terminal to pronounce this correctly. Too early in the morning. Neurodegenerative disorders as well. Prevail Therapeutics taken out by Lilly. Coming up on Bloomberg Markets, Stephen Coren. This is timely. The chief executive officer of one of our major medical institutions in this nation, and certainly in this beleaguered New York City. Stay with us. Futures up 23. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
With a new administration coming to Washington, changes are undoubtedly in store, from the economy to foreign policy to public health. I'm David Weston. Join me for a Balance of Power special report, a look ahead to the next 4 years, this weekend on Bloomberg Television.
This is Bloomberg Surveillance. I'm Emma Chandra with the Bloomberg Business Flash. The Federal Trade Commission has ordered some of the biggest tech companies to hand over information on how they collect and use customer data. 9 companies were mentioned, including Amazon, Facebook, and YouTube. The FTC is also asking about the company's advertising and user engagement practices and how these affect children and teens. It is the latest concerning sign about the U.S. economy. A growing percentage of American homeowners are looking to delay mortgage payments. In the first week of December, the proportion of mortgage borrowers seeking relief rose to its highest level since August. That's according to the Mortgage Bankers Association, and that could eventually lead to more closures. Credit Suisse has signaled that business is continuing a mixed performance in the fourth quarter. The investment bank is doing well, with revenue higher than it was a year ago. But Credit Suisse warns that write-downs and legal provisions will weigh on earnings. And that's the Bloomberg Business Flash. Tom, Francine.
Emma, thanks so much. Greatly appreciate that. I want to frame out the data check here and really start to look to a Fed meeting, which I think is way beneath the radar as well. Futures up 22, Dow futures up 167, the VIX 23.35, and that frames out an equity market. I just looked at international markets. I just looked at small and mid-cap indices as well, and as you know, they're buttressed up right against record highs. It is the bond market that is fascinating. I want to begin with the persistency of greater negative yields in Germany. No need to quote that, but nevertheless, we're there at near record lows. And you're really seeing in the U.S. 2-year, this is a big deal, from 0.14 down to 0.1170, and we've had even a little bit lower U.S. 2-year yield there as well. The mathematics of the real yield is simple, but there's some interesting dynamics. Negative 1.009 on the 5-year forward. Peter Orszag will join us. He writes for Bloomberg Opinion. He's with Lazard. Far more importantly, he owns the idea of the reaction functions and the glide paths of our international system. We'll talk to Peter Orszag about the smoothness of 2021. Nothing smooth in Washington. This is Bloomberg. Good morning.
goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. This is a joy, and a particular joy this December, to run into Peter Orszag. He's a banker now hidden in the bowels of Lazard as their chief executive officer of financial advisory. But far more than that, he is one of our truly great academics of thinking about our fiscal policy, a former service with OMB, thinking about our ruptured retirement plan, and also the mathematics in glide paths of where we're heading. This is what you do when your father taught math at Yale University. Peter, wonderful to have you with us. I want to get right to the glide paths. It's a phrase I associate only with you. Do you see a 2021 of stability and relatively gentle glide paths, or are we out at the tails distribution?
The problem is we've got two different stories. We've got between now and let's call it April or May, and then we've got thereafter. I think between now and April or May, we unfortunately are in for a rough spot, both on the virus, the pandemic, and on the economy. Policymakers aren't helping, and maybe we'll turn to, for example, the U.S. stimulus debate in a moment, but they're not helping at a moment of very substantial risk, because the pandemic exerts a lot of downward pressure on the economy, and the economy therefore needs help.
I want you, Peter, to address the stimulus now. We've gone from 900 gajillion down to 700 gajillion. It is, you know, whatever anybody's politics, we can all say it's a train wreck happening in real time. I want you to speak now to the senator from Kentucky and people that are worried. They're deficit hawks. What do you say to the deficit hawks right now?
Right now, the most important thing that we need to do is avoid further damage to the economy. There are 300,000 jobs lost at the state government level, more than 1 million jobs lost at the local level. Small businesses are hurting. That is the first priority. When interest rates are this low, we have room to provide plenty of fiscal support to help offset the permanent damage that can come from that kind of job loss. I don't think we're appreciating how much scarring of the economy can occur when there is that much destruction that happens. And so right now we have an opportunity to try to mitigate that harm. One of the reasons why 2020, as bad as it was, turned out much better than people might have expected is that the CARES Act was so massively powerful that in the middle of a pandemic, savings rates went up, credit card debt went down, credit scores improved. These are amazing facts, and they help to mitigate some of the pain. But we are bumping up against a real constraint. Eviction rules are scheduled to expire at the end of December. Parts of the additional unemployment benefits that were provided as part of the CARES Act, scheduled to expire at the end of December. State and local governments facing 15% declines in revenue for their next fiscal year. There will be more pain coming unless we act aggressively.
But so, Peter Orszag, are you worried that Republicans are rediscovering their traditional concerns over debt? And does that mean that even if we get a stimulus, it just won't be large enough?
I am worried that it won't be large enough. And what we are seeing overnight and this morning, the separating out of state and local fiscal relief from this other overall package, illustrates the problem. You do not want state and local governments in the middle of a downturn raising taxes and cutting spending, which is exactly what states are going to do as their legislatures come back into session in January, looking out at their fiscal year that begins midsummer. They're going to enact spending cuts and tax increases right when the economy doesn't need it. As one example, many states are already starting to do this. Georgia has cut $1 billion from its K through 12 education budget in the middle of a downturn when schools are already hurting and there are a lot of special circumstances that are arising. This is not what the economy needs right now. And I appreciate the concerns about the long-term fiscal trajectory, but this is not the time to be allowing those concerns to prevent acting immediately and aggressively to provide what the economy needs.
What will be the main challenge for Janet Yellen in 2021?
Oh, I think there are multiple challenges, but the first one is to try to get what we were just discussing, support for the economy enacted if it doesn't happen now. I really do hope it happens now, but it may spill over into Janet Yellen's term. Secondly, I think she faces a lot of underlying questions that need to be resolved. So, for example, how much on that relief are we trying to prop up firms and kind of just hold them in place, kind of freeze frame? And how much are we trying to allow the reallocation that needs to happen in the economy into a post-pandemic world? How much are we allowing that to happen? On China, how much are we viewing them as economic competitors versus needing to cooperate with them on important things like climate change? In healthcare, how much are we trying to prop up additional capacity at hospitals to help prepare for the next pandemic if one were to occur, versus wringing more efficiency out of the healthcare system? So you have all of these kind of dualities that need to be resolved one way or another in 2021 to set the stage for the next several years. And that's in the midst of an economy that is still going to be recovering from the after effects of the pandemic. And on that, one of the things I know that she'll be focused on is the number of people who are unemployed for a very long time. So we're almost at 4 million people who have been unemployed for 27 weeks or more. And if you stop and think about how much your attachment to the labor force and your skills degrade after being out of work for 27 weeks or more, I think we can appreciate how painful that can be, not only for the families involved, but for the economy as a whole.
Dr. Orszag, I want to go a little mathy here and a little accounting with you as well. One of the great treaties years ago was Heilbronner and Bernstein's The Debt and the Deficit, where they tore to shreds the conflation that we have in our mind between cash accounting and accrual accounting when we look at our debt and our deficit. Instruct our audience on your basic premise, which is stop sweating about the debt and the deficit as we account for defense programs or social services and the latter. How we over panic about our federal deficit.
We have the opportunity now to do what I've called the barbell strategy, which is, I think, exactly the right strategy in this kind of situation. A lot of short-term fiscal stimulus to try to get the economy back on its feet, reduce the number of long-term unemployed people, shore up state and local governments. You can couple that, if you're worried, with some delayed fiscal action, that takes effect well into the future. And what really matters for the fiscal trajectory is that more long-term path, along with what happens to interest rates. And I think the one thing that we really do need to take into account is when interest rates are this low, it's a much different picture for the fiscal trajectory than an era when interest rates were dramatically higher. So the trade-offs are also a lot different. But even if interest rates were to go back up, we still have this opportunity to do fiscal stimulus now and couple it with long-term fiscal action that shores up Medicare and Social Security and the other long-term drivers of the budget.
Peter, we had a story yesterday actually talking about, Mario Draghi leading a call with other central bankers to try and avert a global solvency crisis. Is this the next big thing that will hit?
Well, so far it's been remarkable both on the corporate and on the sovereign side that there's been, there was a first wave of corporate restructurings. There have been some sovereign restructurings. Lazard advised on Argentina and Ecuador as just two examples. But the large scale across the board, just waves of bankruptcies and restructurings, both on the government and on the corporate side, have not happened yet. And the reason for that is that in large part, central banks have flooded the zone, provided lots of liquidity, and kept interest rates so low that even struggling businesses can refinance at relatively attractive rates. So I think there's, it's always a concern with significant amounts of debt regarding whether when rates do go up, entities will find themselves in trouble. But so far, we had kind of a first wave, and there's been a big debate about whether a second wave will occur. Hasn't happened yet.
Peter Orszag, wonderful, and please stay with us if you can. Bloomberg Opinion columnist, an important column out on the virus and much more importantly, the indirect effects of the virus. That'll be one of the themes with Shonali Basak here in a moment. Coming up on Bloomberg Markets, with Mollis, our president and founding partner. Look for that in the 11 o'clock hour. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix in London. I'm Tom Keene in New York. Let me do a single best chart about the pandemic. And what's important about this chart is it's grim. It's a little bit mathy. I did this for Peter Orszag just to dazzle him. In that when you have medicine and not finance, and when you have a bacterium or particularly a virus, you have a trend. It's exponential, which means on a log axis, It's a straight line. Way off to the left of the chart is a straight line back to May. And if you take the straight line now and you move it forward, that's called an extrapolation, we get to 400,000 deaths by March, we get to 500,000 deaths by May, and we get to 600,000 deaths, which our great Steve Dennis talked about the other day, by the 4th of July. That is an extraordinary and very difficult chart. Shonali Basak is with Peter Orszag.
Thank you, Tom, and thank you, Peter. You know, something you had pointed out was even above those deaths from COVID is 40,000 more people are dying unexpectedly from other issues, as simple as diabetes, blood pressure, Alzheimer's. How much damage is our healthcare system undergoing right now?
Well, what's been happening is that as hospitals have turned towards treating COVID patients, their non-COVID utilization rates have dropped precipitously. That's both because of mandates to avoid anything that's not absolutely necessary, and also because of patient fears about getting COVID should they go in to see a doctor or go into a hospital. And so the result has been throughout 2020 a significant reduction in healthcare utilization, which recovered a little bit in the late summer and early fall, but as for the year as a whole has been down significantly. A big question, therefore, has been, well, can that much healthcare utilization just disappear without it harming health outcomes, without seeing some consequence from it? There was at least one theory suggesting that maybe that could happen because we know that there are lots of inefficiencies in healthcare, and so it is possible to reduce spending without harming outcomes. But it was not at all clear that the kinds of spending that we were averting outside of COVID were the kinds that you'd want to cut back on to minimize any harm or eliminate any harm to health outcomes. And unfortunately, it looks like there has been a consequence. Those 40,000 additional deaths are either kind of miscoding. They're either actually due to COVID, but they were reported as pneumonia or high blood pressure or some other cause, or they are likely the result of this averted healthcare utilization. Either way, they are related to the pandemic. And so you're right that the deadly consequences of this virus are much larger than what the official statistics suggest, because they're either more deaths that are just not being recorded properly, or they're more deaths because people are afraid to get health care because of the pandemic itself.
Well, the other issue here, too, is that states, when they're looking to balance their budget and they're increasing pandemic-related spending, they cut health care and they cut education costs. Correct. What kind of damage will that have in the longer term?
Well, this returns to the need for some state and local fiscal relief, because the two largest items in state budgets are support for healthcare, especially Medicaid, which serves low-income Americans, and then also especially higher education. And lots of these effects are then quite subtle. So, for example, Tom Kane of Harvard and I have shown that one of the things that happens during recessions is states cut back on support for higher education. That reduction in higher education appropriations at the state level then harms the quality of public universities and public community colleges over time. And so some of the effects you may not see for years because they take a while to build up.
So beyond the healthcare crisis, we still have this economic crisis that's going on. And you had told my colleagues that a lot of the damage in terms of restructurings and bankruptcies have not even happened yet. So how long does that damage spread on?
Well, I think this is one of the big questions, which is how much does the economy look different post-pandemic relative to pre-pandemic? Because if there is a lot of this reallocation, so a lot more of certain types of entertainment, a lot less of others, a lot more ordering from home and a lot less shopping in stores and going out to restaurants, even post-pandemic. If a lot less business travel, a lot more using video conferencing. The more those things happen, the more that there's going to be severe damage on the companies that had been providing the old goods and services. And some of them are kind of quasi-zombie companies at this point that are being held aloft by easy financing, but with no real long-term prospects if the economy does shift in a fundamental way. So I think the big question is, does that happen or not?
Well, answer me this. This is all happening when we're seeing these IPOs double. Every banker I speak to on Wall Street is telling me you're going to be hard-pressed for me to give you a reason that next year won't be a great year. That's what they're saying. So how do you explain this exuberance? Are executives really worried about where we are in what some are calling bubble territory?
Well, a few things. First, financial markets are not the economy. Wrote another Bloomberg column on that. And you know, the share of employment, for example, that's represented by publicly listed firms is substantially lower than it was 25 years ago. That's one point. The second point is interest rates are really low, and that helps to, that affects valuations because it affects how future earnings are discounted. And then I think the final thing is 2021 actually may turn out, after we get sort of past the spring, to be quite a strong macroeconomic year, because we do have this built up savings, this pent up demand basically among American households. American households basically have $1 trillion more now than they did about a year ago, which is a remarkable statement given that we have gone through a pandemic in the meanwhile. So what you might see after the vaccine is widely available is a spurt of activity in 2021. That doesn't mean that there's no scarring or long-term harm from the lagged effects of the recession.
Peter, thank you so much for joining us. That was Peter Orszag, Bloomberg opinion columnist and Lazard CEO of Financial Advisory. Francine, back to you.
Shonali, thank you so much. Now, coming up next, we continue tracking COVID-19 with Dr. Amish Adalja, Johns Hopkins Center for Health Security Senior Scholar. We talk vaccines, we talk lockdowns. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, as we continue to track the virus, joining us today from Johns Hopkins is Dr. Amish Adalja. He's a senior scholar at the Center for Health Security. Thank you so much, Dr. Adalja, for joining us. When you look at the vaccine rollout, is it functioning as it should?
So far, so good. But remember, this is when we're just kind of vaccinating healthcare workers and nursing home residents, so they're kind of a captive audience, much easier to do. Many healthcare workers can be vaccinated at hospitals where they don't have to worry as much about the cold chain. When the real challenge comes is when we're vaccinating people that live in the community and more of the general population. So right now, I suspect everything is going as expected. Hopefully, I'll be vaccinated by the end of this week.
How will hospitals be coping during the holiday season?
It's going to be rough no matter how we look at it, because this vaccine isn't going to have an impact on the patients that are at the hospital today, tomorrow, or next week. And what we know is that we are at record numbers of hospitalizations, and we have a very uncontrolled outbreak all throughout this country. So we do anticipate more people getting hospitalized, more people dying, and hospitals really struggling on a day-to-day basis, worrying about their capacity, worrying about their staffing. So I think it's going to be a dark several weeks ahead.
Dr. Adalja, how much time do you also spend trying to figure out how we roll out the vaccine in countries that don't have the funds that the UK or the US actually have?
I think this is going to be one of the biggest challenges, and this will likely stretch into 2022, especially because the vaccines that we have now, the first generation vaccines, are all three two-dose vaccines, which are logistically difficult. And some of them, the Pfizer and Moderna, have cold chain requirements that are very hard to establish when you're talking about a place that doesn't have stable electricity, where they have difficulty with ordinary vaccines that require normal refrigerator temperatures. So I do think that likely you're going to probably see second generation vaccines play a bigger role in the developing world, because it's going to be so challenging. Although there are organizations like the Bill and Melinda Gates Foundation, CEPI, the COVAX consortium that's trying to get vaccines to this part of the world, it's going to be one of the biggest challenges they face, because we're still trying to eradicate polio and eradicate measles in some of those countries. So this is going to be a really Herculean task.
So I keep on reading conflicting reports. It'd be good to get your sense of this one way or the other. Do we know, once you get vaccinated, do we know if you can still transmit disease? Are you still able to pass it on to someone?
This is an open question. We know that the vaccines are very effective at preventing what's called symptomatic disease, but we don't know if they're effective at preventing asymptomatic disease. And if you get infected, despite the vaccine, and you have an asymptomatic case, are you contagious to others? That's something we need to study and know in more detail. I suspect there's some effect. I don't know how high the effect is. And Pfizer and other companies are going to be doing studies to determine whether or not people are getting infected asymptomatically. But the issue is if you've got uneven vaccine uptake, you still have to think about social distancing. You still have to think about you passing the virus on to a vulnerable member of society, even if you're vaccinated. And I think that is something not a lot of people want to hear, but it is something that we have to think about, because, again, there's so much community spread.
Thank you so much, Dr. Adalja there of Johns Hopkins. This is Bloomberg.
wages go up when there's so many people out of work.
When you look at hiring, you're seeing those permanent layoffs increase. That's going to be a concern going forward.
The really important thing to keep in mind is we're starting a brand new economic cycle right now.
I think a lot of this Band-Aid stimulus has already been priced in.
These central banks have locked themselves in to being stuck at their effective lower bounds.
It's not that we're not going to grow in 2021, is will it be enough?
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. With equity futures up 20 on the S&P 500, we advanced 0.6%. Tom Keene, New York City, the state of New York. Governor Cuomo with a warning in the last 24 hours. We could be heading for another lockdown.
Yeah, linked right into Mayor de Blasio, and some real caution here. For our worldwide audience, Cuomo and de Blasio barely are on speaking terms. But, John, they were on the same page yesterday about the seriousness of getting to 300,000, and then the extrapolation I did off the Bloomberg terminal this morning, where 400,000 deaths, X the good news on the vaccine, is modeled out in the vicinity of the third week of March. Those are frightening numbers for all.
That's the brutal reality. Let's talk about the good news of the vaccine. One vaccine in the mix already being rolled out in the United States of America, Tom, and maybe Moderna joins the rollout as well in the coming days and weeks.
No, great to see that nurse yesterday having the courage to be the first one out in New York. I believe it was in New York City. That imagery, as we saw in the United Kingdom in the last week. John, you wonder if we're going to vaccinate the Federal Open Market Committee. I mean, they need some protection as well. They may fall asleep. It's going to be such a boring meeting.
I'm not sure whether I should take that seriously or not, Lisa Abramowitz, whether the FOMC needs to be vaccinated. I think for the equity bulls, they probably feel that way.
Yeah, probably. You are correct. So let's talk about the FOMC meeting and the vaccinations of the members, I guess, Tom. Today we're going to start with that two-day FOMC meeting, and the key question will be what their guidance will be as far as extending bond purchases into longer duration bonds. Questions around the potential for a taper tantrum if they don't deliver. Taper tantrum, meaning what? 10-year Treasury yields at, 93 basis points? Not that much of a tantrum. Also today, we're going to be getting Empire manufacturing data for the month of December at 8:30 a.m., industrial production data at 9:15. I'm interested in the Empire manufacturing data, in part because that's the first read on December and the activity in manufacturing, which has been a strong suit in the state of New York. Looking for that. Also today, Joe Biden heading to Georgia ahead of those January Senate runoffs. John, you've been touching on this a lot about how important it is, and the outcome of this, the leadership of the Senate will determine what kind of stimulus bill we will be getting. And John, I will just say this, if 2020 wasn't a bad enough year, we will all be dumped under a foot of snow starting on Wednesday.
Oh, she's so gloomy.
It's just a great year all around. Happy 2020.
Lisa, really?
A foot of snow is
what am I
good
dealing with this morning? Tom, what are you singing?
White Christmas. We want a foot of snow. It's winter,
Okay.
Bing Crosby has to save the general up in Vermont. We want a white Christmas. We want a white December 17th.
I'll do my best to save this show. The price action shaping up as follows on the S&P 500. No idea what's going on. Up about 22 points on the S&P.
Me too.
4-day losing streak on the S&P 500 coming into today. Actually, the longest losing streak on a daily basis going back to September. It's been that long. In the FX market, euro dollar up to 121.59, and in treasuries, yields unchanged. 0.8981% is your yield on a 10-year. Guys, Bank of America out with their fund manager survey this morning. Lisa, I know you've read it. Tom, I know you haven't. So let me bring you one of the highlights from the fund manager survey. The participants were asked when the vaccine will start positively impacting the economy. 42% said Q2 21, 28% said Q1, 19% said Q3. I'll get into the other details of this survey a little bit later this morning. But, Tom, I think that's important for expectations management. A lot of what we're seeing in this market is firmly anchored by a better future. It seems to me that the test for that future is around Q2 next year. that's when people will want to see the economic data start to improve materially because of this vaccine rollout, and that's what's indicated in this survey.
Well said, but in the equity market, what it's about is corporations will adapt. We're not talking fixed income. We're not talking foreign exchange. In the equity market, while we wait, the proverbial end of the bridge, it will be corporations adapting to reality. They can do that, John, where in other financial systems, they can't so much.
Very true. Joining us now is Mona Mahajan, Allianz Global Investors U.S. investment strategist. You're doing better than you did 2 minutes ago. Mona, let's just start with that fund manager survey. The cash levels in this, 4%. They've dropped to 4%. For B of A, that's a sell signal. I'm not sure how well you can lean on this survey to make your investment decisions, but I think it speaks to something a lot of people are concerned about, Mona, whether things have got too bullish too quickly. Your thoughts?
Yeah, absolutely. And good morning, guys. Look, I think generally our thesis had been when we would get the vaccine news and we would see the start of the rollout, markets would very quickly discount the future. They would look 6 to 12 months ahead, as they always do, and they would see a future where there would be more return to normalcy in consumer behavior. And it's been remarkable to see, but that's kind of what's played out. Over the last quarter to date, we've seen the S&P up nearly 9%, but what's driven that 9%? It's really been financials, energy, and industrial. So the return of this value cyclical trade has dominated the headlines. Those sectors are up 13 to 25% plus this quarter. So certainly there's an argument to be made that perhaps we've gone up a little too far, too fast. Markets won't go up for a straight line over the next 12 months. And so there's a bit of complacency that's set in. We see that in the VIX numbers. We see that in credit spreads, for example. We do think that a period of consolidation, a pullback, at least some profit taking and sideways movement probably makes sense. But again, that is probably your tactical opportunity to then think about positioning for 2021 when we are going to see the true rollout of the vaccines and hopefully the true return to normalcy.
Mona, I looked at some of the things away from the 12 stocks we look at on surveillance. I'm as guilty of that as anyone. I looked at small cap. I looked at mid cap. I looked at international, MSCI, blah, 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 blah. Great. Small cap. Is the small cap trend in place, and is that trend fixed into 2021?
Yeah, generally the small cap run has been pretty phenomenal over the last few weeks. But when you think about it or look at it from a longer term perspective, over a 10-year horizon, for example, small cap versus large cap, you could make the argument that you're still in just early innings of mean reversion. And I do think, unfortunately in this pandemic, it has been that small and medium-sized business that has really gotten hurt in an outsized way. And so I think when we think about the recovery, these are the companies, if they do survive, that will thrive in an outsized way now as we come out of the pandemic. So certainly we think over the next 12-month period, that trade remains intact as well.
John, early innings is a baseball illusion that Mona's making there. It's like 9 innings, John.
Thanks.
7th inning stretches.
What did you do on your day off? Let's just do this early. How did you spend your day off?
Case of wine.
We're getting our karma together for Tottenham-Liverpool. It's like a ginormous game. That's all I got left. Lisa, save us.
Okay, let's talk about the consensus. Mona, you're talking about the shift into small cap stocks, and you're not alone. And John was talking about that Bank of America investor survey. It also highlighted that a record 31% of respondents are long small caps versus large caps, and other record consensus trades. Does the group think worry you?
Certainly this trade idea and really this shift into cyclical small caps, even the non-U.S. trade, it has become more and more consensus. But that being said, I do think the numbers will speak for themselves as we get through this earnings recovery in 2021. When you look at the estimates and the forecasts that are out there, we're looking at a 22% S&P earnings growth next year, which in itself is phenomenal. But really what's driving that earnings growth is going to be those underloved sectors. So we see financials up there, we see parts of energy up there, we see industrials up there. A lot of those recovery, reopening plays are looking to have a meaningful rebound in earnings. And so I do think we will continue to get the momentum as long as we continue to see that earnings and underlying fundamental driver behind it.
Well, we've got some multiples to grow into over the next year or so, that's for sure, Mona. My last question for you, the fiscal package aid, the discussion down in D.C., how important is that for you just in terms of your outlook, medium term?
Yeah, absolutely. You know, I think it's going to be pretty essential to have some sort of economic stimulus to create this bridge that we've all been talking about between now and when the vaccines are here in earnest. And clearly, the $908 billion package would be a step in the right direction. We're hopeful that that does happen within the next probably now 5 to 7 days or so. But if that doesn't happen, we remain pretty confident that early in the next presidential term, there will be a sizable fiscal package. And so to us, it's coming. It's just a matter of timing. We do think it's important. We do think it's critical. Hopefully some of it can be backdated to support, you know, some of the unemployed right now and get them the support they need to get through these next few weeks, which continue to remain challenging. So we remain hopeful, and we hope, we continue to feel that that's a good part of our thesis, an important part of our thesis.
Could become more challenging in the next several weeks or so. Mona, thank you, and thank you for everything this year as well. Our best to you and yours.
Happy holidays,
Mona
guys.
Mahajan, you too. Allianz's Global Investors US investment strategist. Time is running out. Tom Keene, and pressure's building on leadership in both the House and Senate to put a vote, to put something to the vote in the next few days.
Peter Orszag, who's relatively apolitical, is public service to the Obama administration. Okay, fine. He was scathing, John, about the cost of hysteresis of this long-term unemployment. He was bi-politically scathing in his criticism. I believe the working number is from $900 billion down to $700 billion because they've taken out this, that, and the other thing.
Yeah, it's going to be about 7:48, Lisa, and you'd have to say there's a chorus now. There's a chorus on both sides of the aisle pushing for their respective leaders to get together and put something to the vote and do it quickly.
Yeah, but there has been for months, John. This is what's concerning, right? And everybody's saying this has to get done. It hasn't. Where are we now? We're in November? Dead silence. I love it. December. I'm not.
December 15th. I mean, I'm not joking. I had to check just to make sure.
It does feel like the longest year ever.
I think I only have 3 more shows left with you guys after this one for 2020. So 3 more shows left with you.
It's sad.
I mean, I'm happy about it. Don't cry. I'm really pleased. Just 3 days. And that's not directed at you, Lisa.
It's okay.
Lisa Bravis, Jonathan Ferro, Tom Keen's back. If you didn't notice, about a minute into the show, straight off the rails. Coming up later this hour, Ian Lingen, BMO Capital Markets, head of US rate strategy. For our audience worldwide this morning, good morning. It's great to be with you. Up 72 on the NASDAQ. We appreciate, we advance.
It is. We advance.
1%. This is Bloomberg.
With the First Word News, I'm Emma Chandra. President-elect Joe Biden says it is time to turn the page on what he called an unprecedented assault on democracy. Biden spoke hours after the Electoral College sealed his win. He noted that he won 306 Electoral College votes, the same as President Trump in 2016.
At the time, President Trump called the Electoral College tally a landslide. By his own standards, these numbers represented a clear victory then, and I respectfully suggest they do so now.
President Trump offered no public reaction to the Electoral College vote. A grim milestone in the US battle against the coronavirus. The death toll has now gone past 300,000. Meanwhile, more than 600 hospitals across the country are receiving vaccines this week. The first shots are being given to healthcare workers. The crude oil glut left behind by the coronavirus pandemic will clear by the end of next year. That's according to the International Energy Agency. Still, the IEA says demand will be lower for longer than expected. The agency trimmed forecasts for world fuel consumption following a new wave of lockdowns. President Trump praised outgoing Attorney General William Barr for having done a, quote, outstanding job. Still, Barr is leaving office later this month after having crossed the president on 2 key issues, his claims of voter fraud and the investigation into Joe Biden's son. The president criticized Barr in an interview last weekend. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
At the time, President Trump called the Electoral College tally a landslide. By his own standards, these numbers represented a clear victory then, and I respectfully suggest they do so now.
President-elect Joe Biden looking to move past the turbulence of the post-election period of the last month, 6 weeks or so. From New York and London this morning, good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. We shape up as follows this Tuesday morning. The price action looks like this. In the equity market, up 27. We advanced 0.75%. The S&P 500 with a lift after 4 days of losses. In the FX market, euro-dollar 121. Around about 60, just off the highs for 2020 on the euro against the US dollar. And as this FOMC meeting begins, Tom, concludes tomorrow, yields unchanged, around about 90 basis points on a 10-year. And the Treasury bears hoping for a green light from the Fed tomorrow, a green light for yields to go higher.
Yeah, I'd point out, John, I'm looking at the two-year yield, which has come in over the last 3 days. 0.1170 is a lot different than 0.14. I'm literally looking for confirmation there on the German two-year yield as well. Haven't gotten that this morning, so maybe that's a Fed meeting kind of move in the two-year yield. Right now, Kevin Cirilli joins us, our chief Washington correspondent. Kevin, I don't want to look back to the Attorney General. I think that news is pretty much out there. I want to do a look forward to the lame duck Attorney General, Mr. Rosen. What does an Attorney General do in a lame duck administration?
Well, there's been widespread speculation, Tom, about whether or not President Trump would issue more pardons and the scope of additional pardons. I don't want to speculate, but based upon my reporting, what I can tell you is that there remains a deep skepticism, not just amongst Democrats, but also Republicans, about the individuals that President Trump would choose to pardon. Now, doing so is a token of sorts that he can play as he looks to create a political future for himself in both the midterms and even potentially beyond. And so if he were to make a significant pardon for an individual that would rattle, quite honestly, folks in the national security world of the Republican Party, then that would set him up without question as trying to carve out a path forward in the next presidential cycle ahead.
Does Department of Justice intrude on the pardoning process?
It can advise the president in terms of making decisions on that front. But the legalities of this is a conversation that lawyers throughout the country and constitutional lawyers in particular have been speculating about now for quite some time.
So, Kevin, how much energy is there in Washington, D.C. actually committed to looking back at the election and looking at the next couple of months? And how much is the energy just completely and squarely on whether it's a $748 billion or whether it's a $908 billion fiscal support plan?
The policy driving the next couple of weeks here in Washington, D.C., as Congressman Tom Reed, a Republican from New York, put it yesterday, he's the co-chairman of the Problem Solvers Caucus, is that they're hoping for a, quote, Christmas miracle, end quote, with regards to fiscal stimulus. This has been something that has really frustrated, based upon conversations I've had yesterday, rank and file members, especially if they have to go home to a holiday empty-handed. They could have, lawmakers and leadership could have chosen a path that on the day of vaccinations finally being administered to Americans, there have been a moment of bipartisanship and fiscal support and aid coming for Main Street America. They opted not to do that. Beyond that, in terms of the investigations, based upon the political strategists that I talk with, especially on the conservative side, they feel that there is definitely an appetite amongst Republicans to look into some of the business dealings pertaining to members of President-elect Joe Biden's family, including Hunter Biden. The investigations, we're going to have to wait and see. If Republicans keep control of the Senate after Georgia, then yes, there will be investigations into election security as well as into members of the, as well as into Hunter Biden. But if Democrats keep control, then no, they will not have, they have the ability to set the agenda. And so that will not play out in the Capitol halls of the Capitol, but it will play out in other media spheres.
A lot is hinging on the votes on January 5th in Georgia. Kevin, in terms of policy and fiscal policy, you mentioned a couple of things there. I just wonder how lonely leadership is down in D.C. this morning, given the chorus that we're hearing, just to put the bipartisan bill to the vote.
They're lonely, but they're powerful. And Speaker Pelosi and Leader McConnell have been able to drive this political stare down for months. And so they have kept these negotiations incredibly close. The rank and file members have not had, on either side, have not had a significant public revolt against leadership that would force them to do some type of vote. And as a result of that, Leader McConnell and Speaker Pelosi are still holding all of their cards of their power in these stimulus negotiations, or lack thereof.
Kevin, I look at the Washington Ballet, and it's all wrapped around egos and that and books. I mean, Ambassador Bolton wrote a book and all that. Does Barr write a book? I mean, is he in a position to put out 800 pages that nobody will read?
So this is the conversation that everybody wants to know in Washington, D.C., because they want to know if A.G. Barr, who we should note has deep ties to the Bush world of yesteryear, will he opt to become, what type of voice will he want to develop in the long term? And that's the biggest unknown. And as a result of that, the intrigue and the palace intrigue this morning is running rampant into Attorney General William Barr's perspective and view of history.
800 pages that no one will read.
No, you buy the book and you say you own it, you know? That's
Kevin's
what everybody
so
does.
good at this now.
Yep.
He just lets it all slide. Just lets it all slide.
It's just like you.
And if Tom interrupts, he says, carry on. Kevin, it's great to catch up. Thank you. Kevin Cirilli, Bloomberg Chief Washington Correspondent. Tom Keene, I know what to buy you for Christmas. A book with 800 pages that you'll pretend you'll read and no doubt talk about it on TV and radio.
Some of them sell like hotcakes and all that. Mr. Woodward's book and Mr. Bolton's book and the rest of them. Others, I mean, can you imagine 2 volumes from President Trump? I don't know, you know. It will be
two massive volumes from President Obama.
Yeah.
So why not
Can I
2
talk
volumes
about
from President Trump?
Can we talk about the markets? All you want to do is talk about, you know.
Please do.
Okay, the 2-year yield.
You focused on Attorney General Barr, not me. Let's be clear about that.
0.1170% in the 2-year yield. I'm sorry. I look at Britain. I look at the U.S. Yeah. It's unimaginable to the people we talk to that we could get negative rates here. John, is that the surprise for 2021?
The front end has an elephant sitting on top of it. It's the Federal Reserve with a reaction function skewed asymmetrically, Tom, which basically means if things get worse, they're going to do more, and if things get better, they won't do anything. So the outlook for rates at the front end, they're not going up anytime soon, Tom. It's what happens at the long end that I think things get interesting, especially in the next 24 hours on 10s and 30s.
Yeah,
for yields to go higher here, I think people need to believe the Fed's not going to step in and put a lid on it.
What does the Fed do? What does the Fed do at 0.08, 0.07? What's their reaction function as they get to the zero bound in the 2-year yield?
I don't think they do anything, Tom. I think that's the whole point.
I don't know.
I think they like where the front end is.
Well, yeah, they may like it, but it's like Japan. I feel like it's, Japanification.
We can talk more about it.
We can.
From London and New York this morning. Good morning. For our audience worldwide, with Tom Keene, Lisa Abramovich, Jonathan Ferro, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
from New York and London for our audience worldwide. Good morning to you all on Bloomberg TV and radio. Here's the price action. 4-day losing streak on the S&P coming into Tuesday. We undo some of that a little bit. We come up by about 0.7% on the S&P 500. On the Nasdaq, we advanced 0.6. On the small caps, we're up 0.75%. We touched on the Bank of America Fund Manager Survey a little bit earlier this morning. A record long into the small caps versus large caps. 31% of respondents. A lot of people getting behind the small cap story. We can talk about that a little bit later this morning. Switch up the board. I'll continue the story in the FMS story from Bank of America. They are looking at a record number of respondents looking for higher long-term yields, about 87% or so. Can yields go much higher? Yields up by about a basis point on a 10-year to 0.9%. That question, of course, is pertinent for the Federal Reserve decision tomorrow. Will they extend the average maturity of their asset purchase program? That's got to be the number one question I've heard asked from the bond market and those in fixed income over the last several weeks. Finish on this, switch up the board, and I'll finish on this from the Fund Manager Survey. This is a hit brought to you by Bank of America, seemingly. Your most crowded trades at the moment, still number one, long tech, number two, short the dollar, number three, long Bitcoin is number three in the Fund Manager Survey. Unreal. Euro dollar, Tom, 121.59. Short dollar consensus. Long Bitcoin is in the mix now. It's the number three crowded trade.
Yeah, I'm glad you mentioned it. Thanks for the huge response to Professor Rubini with us a number of days ago. Just extraordinary how fired up he was with Bitcoin, 19,362. Ian Lingen is a terrific, magnificent award winner in looking out into the future and pulling it back into the rates market. He's at BMO Capital Markets. He writes extremely dense, hugely read notes on Wall Street. And Ian, what you do today, vamping off Carpe Diem, is you look at a Powell that will be very dovish. Why will he be dovish in the present tense as he attempts to look out in the future?
I do think that he has a bias at this point in the cycle to attempt to out-dove even the most dovish expectations that are placed in the market. There's an open question, as you pointed out earlier, about what happens with the extension of the weighted average maturity of purchases, and that will be the initial, or that'll drive the initial response in the Treasury market. If we don't get the WAM extension, what we'll look to is outcome-based forward guidance for QE purchases in 2021 and beyond.
The textbooks tell me that the Fed controls somewhere out of the vicinity 7 years, 10 years, or that. Are we at the point now where the Fed controls 7-week paper?
I would say that the Fed's control of the Treasury market has moved well beyond the 2- and 3-year part of the curve, where we tend to think of as the front end. We're defining the front end as now to include the 5-year sector. And that's just a reality of an environment where the Fed has no intention of moving the market for a long time.
Ian, what are we looking at in terms of Fed ownership eventually of longer dated bonds? Are we looking at 70% of 20-year bonds that the Fed's going to own?
I don't think we'll ultimately get to the point where SOMA or the Fed runs up against their limits in the way that we saw in Europe, because recall in Europe, they've had a lot of issues with their bond buying program, not because they didn't have the will to expand the balance sheet, but they simply ran out of bonds to buy. Look at Washington, look at the Treasury Department. We're not going to run out of bonds to buy anytime soon, not to worry, they will make more.
State contingent forward guidance or time contingent forward guidance? Ian, why would you have state contingent forward guidance around the asset purchase program, which could lead to a premature tightening of financial conditions if the economy picks up pretty quickly next year? Why wouldn't you just do what the ECB has done and kick the can down the road into 2021 and not leave it open to the economic data to dictate, or at least paint a picture of what the market believes the Fed's going to do next?
I think the short answer to that is credibility. The Fed wants to give the market the information that they have, explain the reaction function to the evolutions of the data, because the fact of the matter is, if we actually see inflation take off and the reflationary trade gets it right, the Fed needs to be in a position to respond if it's the true demand-side inflation that they want to see.
But I thought, Ian, they don't want to respond to that. I thought the story and the effort of communication of over the last 6 months or so was to tell everyone that even if that happens, we'll hang back. We'll let it go for a little bit.
Well, they're not going to respond to supply-side headline inflation, and responding in the context of their new framework, I think, is the nuance that's worth making. They're not going to respond to inflation in the way that they might have traditionally. But if we find ourselves in a situation where inflation really is coming back on the upside of expectations, the market needs to have confidence that the Fed will eventually step in and do something.
So taking a step back, Ian, there's a more fundamental question that I still am uncertain on, this idea of would rates be that much higher if the Fed wasn't sitting on, to some degree, the long end, even theoretically, the expectation that they will buy bonds. In other words, could rates really rise all that much when you have such muted inflation expectations, such a huge debt overhang, and such a massive productivity gap that really it's unclear how we're going to bridge that?
That's a great point. One of my core tenets in the market is that longer dated rates are set by inflation and growth expectations globally, and they're not a function of supply and demand, which means to some extent they're not a function of Fed buying. So if the Fed were to step away, the feedback loop between an increase in higher rates, what that would do to risk assets, and then flight to quality, I think, is the important cycle that I would be watching. I don't think without the Fed, you could see 10-year yields sustainably above 1.5 without crashing the equity market.
Ian Lincoln, I got to make some money in the Q1 of 2021. There's three variables in the equation: the nominal yield, inflation expectations, and then the strange thing like the strange program, the real yield. Which is the tradable event? Nominal yield, real yield, or inflation expectations?
I'd say the biggest tradable event in the first quarter of next year is going to be break-evens. So inflation expectations, the 10-year sector, I think that's where you will have a breakout, even if the Fed is continuing to push further out the curve. Expectations are really going to start building once the year gets underway, vaccinations continue, and the recovery has some fit.
John, that's fascinating. The real yield doesn't matter.
That's a great question, Tom. I can explore it further with Ian right now. The real yield could even be more negative than it is now, Ian. Is that what you're suggesting?
That is exactly what I'm suggesting, and the Fed would like to see that, right? The Fed really wants rates, real yields, as low as possible because it spurs the economy that much more.
I'm really struggling to get through this show, Ian. It's great to catch up with you, Ian Lincoln, BMO Capital Markets. And not because of Ian. I think Ian's fantastic.
Yeah.
Just struggling with Tom Keene this morning. Day off from him was just, a release. It was a deep breath, a sigh of relief, and then, something like that.
It's hard here. It's that time of year you're trying to be light about things. But I'll be honest, John, I don't know what London's like. I was really taken back by the news. So Lisa and I are living it here. All of our viewers and listeners are living it. John, it's a changed world. My thing is, if we're not laughing about it, we can't get through this.
Oh, Tom, I couldn't agree with you more. It's just a really, really difficult time. London at midnight, a minute past midnight, going into Tier 3, the toughest restrictions. There will be a loosening.
John, what does Tier 3 mean for you?
For me personally, Tom, I'm still coming to work. I'm lucky. For other people, for restaurants, they'll have to close. Those restaurants will not be allowed to have people in the restaurants, dining in there. Those hotels, they probably won't be able to remain open, Tom, at this point, going into Christmas. It's just going to be a really difficult time. Non-essential stores, whatever is categorized as non-essential stores, they'll have to close as well.
So Turnbull and Asser
shuts down. It's a difficult moment.
Turnbull and Asser shuts down.
They will have to close. They would have to close,
Look, in New York, we're not having that mandate yet, but there's going to be a foot of snow. So what happens to outdoor dining? Indoor dining was just, I'm interested in the snow. I'm just saying.
You'd have to believe that's done already.
It's gallows humor, as Tom was saying. It's what more can happen, right? Solar flares?
Look, for the people that run these businesses, we've said repeatedly on this program, to be told that you've got to close up shop and have no one follow up with a check,
no, it's really serious.
I just think it's absolutely brutal.
Yeah.
I just think it's absolutely brutal. Especially for the businesses that took delivery of stock this week in London, for instance, took delivery of stock, thinking they've got a busy week coming up, going into the Christmas period, and they've got a night to play with.
And for all of our audience to understand, the three of us have been hugely sequestered, and Bloomberg's had a great team of people making that easy for us. But, I'll tell you, John, the few restaurants I've been to, I don't know how they do it after just that marginal indoor experience of the last couple of weeks. Because, you know, I mean, I'm making a joke about leasing snowshoes going down to whole paycheck. But, you know, the reality, John, is nobody's going to be eating outside in a foot of snow.
Well, the reality is, of the year so far, that the conversation over the economy is just completely separate from the conversation around the market.
Yes,
and that's been
well
true
said.
now for the last 9 months. And I've felt that in every single conversation I've had with a guest, whether it's on this program or elsewhere, we've got a choice to make. Do you want to talk about the economy, what's happening right now, or do you want to talk about the market and the future? And they're two different conversations. And I think we actually had that conversation last week, Tom, with a guest on this program, that if you're running macro strategy or market strategy, but you're also the chief economist, you have to go onto the call now and you have to ask them, which hat do you want me to wear when I answer this question? Do you want me to be the market strategist or do you want me to be the economist? Because if I'm going to be the economist at the moment, in the near term, I've got a pretty bad story to tell you.
I'm going to go, Lisa, I'm going to go back to Matt Lazzetti at Deutsche Bank in his, without hesitation, calculation of a 12% unemployment rate. I mean, there's just nothing funny about that. And Peter Orszag really emphasized this long-term unemployment as a social issue.
Yeah, but also this divergence cannot continue indefinitely. And I think about the credit crunch among smaller companies, how they haven't had access to the same kind of financing that larger companies have. At a certain point, that does affect, John, the markets. It does affect the real economy. It has to come together at some point.
Well, right now, it doesn't.
Correct.
And the view is that things get better in Q2 2021 once the vaccination rollout really ramps up. And the good news is the vaccines have started. There are two worries around the vaccination starting, though, Tom. One is compliance to the rules that exist right now to make sure things don't get worse in the meantime. Yeah. And two is the pressure that might be coming off leadership to get an aid package delivered and get it delivered quickly.
Now, there's no question about that. Where's the aid package? I don't see it on December 15th.
From New York and London this morning, good morning. For our audience worldwide, with futures up 0.7%, this is Bloomberg.
With the First Word News, I'm Emma Chandra. Joe Biden is calling on the American people to accept the outcome of the presidential election. Hours after the Electoral College sealed his victory, Biden called on the country to, quote, turn the page on what he called an unprecedented assault on democracy. President Trump had no public reaction to the vote. It turns out more U.S. agencies were targeted by Russian hackers. The Department of Homeland Security was hit, and the New York Times says so were parts of the Defense Department. Meanwhile, the Washington Post says that the State Department and the National Institutes of Health were also hacked. Federal agencies have been told to disconnect their SolarWinds software that the Russian hackers manipulated to break into networks. The CEO of the Hong Kong exchange, Charles Lee, has been dubbed Mr. China for linking the exchange to the mainland. He tells Bloomberg TV his successor will need to double down on his strategy.
Hong Kong is now put permanently on an irreversible track of connecting its market with China. And we just have to find new ways to move up.
Lee is stepping down at the end of the year after a decade at the top of the Hong Kong exchange. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. That's the First Word News. I'm Emma Chandra, and this is Bloomberg.
a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We have identified a new variant of coronavirus, which may be associated with the faster spread in the southeast of England. Initial analysis suggests that this variant is growing faster than the existing variants. We've currently identified over 1,000 cases with this variant.
One more thing to worry about. This sparked a lot of concern in the UK and beyond yesterday. That was Matt Hancock, the Secretary of Health and Social Care. For our audience worldwide this morning, good morning. From New York and London, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Price action looks like this Tuesday. We advance on the S&P 500. We take a bite out of the losses of the last 4 days, up about 25 points. We advance 0.7%. Talked a little bit about a euro, just off the highs for 2020 for euro dollar. Euro stronger, out to 121.60 and up about 0.1%. And going into the Federal Reserve decision tomorrow, that two-day meeting begins today. Yields up almost a basis point, Tom, to around about 90 basis points on a 10-year maturity.
Right now, what we're going to do, John and Lisa, is do what we've been doing on surveillance since February and certainly from March, and that is talk to medical professionals, experts on the pandemic, on virology, about what is actually going on now. We can do that with a gentlelady out of Atrium Health of the Carolinas. And this is, of course, Atrium Health and the acclaimed Sanger Heart and Vascular Institute, among others. Katie Passaretti is with infection prevention there, and of course out of the Johns Hopkins Combine. Katie, you received the vaccination. In the treatment that you received, was there any treatment or delay or preparation for possible shock?
Certainly, there were medical professionals on site that were prepared to respond if there were any issues with the vaccine. Luckily, that did not happen. Everything went perfectly smoothly. But yes, everyone should be monitored immediately after the vaccine. Make sure there's no reaction. Make sure there's someone there that can help them if they need it.
With anaphylaxis, we move from a rash onto other things. Explain within your general education at Johns Hopkins of anaphylaxis, and is that equivalent to this vaccination process?
So anaphylaxis is a severe allergic reaction that sometimes can cause swelling in the airway, difficulty breathing, in addition to kind of the rash and hives that you mentioned. It is a very rare side effect of certain medications, and including vaccines. So, not a common thing, and definitely not associated with everyone that gets a vaccine.
Doctor, can you just build on the transportation and logistics and the effort that you guys have put in, not just in the last 24 hours, but I imagine the last several months, and how smoothly things are running so far?
Yeah, absolutely. This journey has not been without challenges. At Atrium Health, we've been working on this for several months with a multidisciplinary team, working to make sure we could get this vaccine into people's arms as soon as it was available, evaluating the evidence. This vaccine is needs very special handling to make sure that it's active. So it requires ultra cold freezers that we purchased to be able to store 300,000 doses for our teammates and our patients. And, working through the logistics that are involved in keeping it cold until the point of delivery have certainly been challenging, but I feel like it's gone relatively well. And, our first doses of vaccine yesterday went off without a hitch.
Dr. Passaretti, do you get the sense that the logistics, making sure that you have all the equipment, making sure that everything goes smoothly, is entirely on Atrium's shoulders in terms of bearing the costs and dealing with things? Or do you feel like you're getting the help you need from state and federal governmental officials?
Yeah, it is certainly a team effort. I would say there is certainly a significant cost to hospitals to, put this into place. Buying an ultra cold freezer is not a cheap endeavor. And, the amount of resources, people, time that you have to put in to make this work is very significant. So definitely everyone's working together, but there is, a non-small burden on hospitals, I would say.
So I guess that based on how things have rolled out at this point, and based on the fact that a recent ABC Ipsos poll showed that 8 in 10 Americans would be willing to take the COVID vaccine should it be available, when do you think they will be able to go out to their CVS or to their hospital, their local hospital center, and actually get the vaccine at this point?
Yeah, so it is definitely going to take some time. One, as far as, getting enough supply to do a broad chunk of the population. And then those logistics that we just mentioned will be very challenging right now to have your, next door CVS administer the vaccine. So for right now, much of the vaccine administration is in larger centers, acute care centers. As we get more vaccine options, that will certainly open up doors and, potential different handling that will allow it to get there. So, we're thinking February-ish for kind of patient population.
Dr. Passarotti, you can't see this, and either can the glorious people listening on Bloomberg Radio, but we've been running on TV like 4,000 people getting the shot yesterday. Did your arm hurt during the shot or afterwards? I mean, that's all John, Lisa, and I want to know.
Correction. Yeah. Tom wants to know.
Tom wants to know, okay. So, getting a shot, I've gotten lots of shots in my life, so that was not an issue. It was minimally sore. I did have pain and tenderness in my arm overnight and, in that muscle, but nothing out of the ordinary, nothing a dose of Tylenol didn't take care of.
Oh, man.
Doctor, before we let you go, I want to finish on a more serious question, if we can.
Please.
The group of individuals that receive this vaccination first, some of which will be at the most risk in society, and they're already in care homes, which means life expectancy is already incredibly low. And I'm just trying to understand, Doctor, what happens in the next several months when people who have had this vaccine start to sadly pass away for no reason connected to this vaccination, but the stories start to build. What's the best way of managing the message around that? The inevitable likelihood that that's going to happen anyway.
Yeah, certainly skilled nursing facility patients are, have multiple medical issues unrelated to the vaccine. I think it's going to be really important to educate up front and to keep track of the data on what happened to those people, what else is going on, and make sure that's clearly portrayed and, by you all and the media, because it does have the potential to put a spin that's not necessarily reflective of truth.
Well, hopefully you can come back on the program. We can talk about it as the vaccination rollout continues to build up. Doctor, great to catch up. Thank you. Dr. Katie Passarotti there. Atrium, Health Director of Infection Prevention. Last week we saw this story with Pfizer. This morning we're seeing this story with Moderna. This comes from the FDA staff who say the vaccine is safe, effective against the COVID-19. Now, Tom, this is the staff report. Then it goes to the advisory board, which I believe they will meet on Thursday. And we could, in a similar fashion, a similar timeline last week with Pfizer, you could have a similar timeline this week with Moderna.
John, somebody was out on Twitter the last couple days talking about the clear memory of polio and the vaccines around polio. I remember that clear as a bell. This is no different. You just have the courage to do it. I mean, I'm making jokes about the shot. I'll be first in line later when it comes to me. I mean, I'm a low priority here. I get that. But you got to have the courage to get this done.
No, I think you're in the right age group now, Tom, to be honest with you. I think you're there. I think you're next up.
Megan,
I think you're in the mix.
He does, can you...
It's going to snow.
I think you're in the mix. I think that you
the
are
mute button.
In the next category. I'm pretty sure Tom is in the next category.
Why does he do that? I mean, he mutes me.
From New York and London, this is Bloomberg.
retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Wages go up when there's so many people out of work.
When you look at hiring, you're seeing those permanent layoffs increase. That's going to be a concern going forward.
The really important thing to keep in mind is we're starting a brand new economic cycle right now.
I think a lot of this Band-Aid stimulus has already been priced in.
These central banks have locked themselves in to being stuck at their effective lower bounds.
It's not that we're not going to grow in 2021, is will it be enough?
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Bloomberg Radio, on Bloomberg Television. It is a most interesting, diverse Tuesday. Markets, well, they move. Futures up 24. But far more, John Farrow, it is about the different definitions of full lockdown, new lockdown, Tier 3, and the rest of the language, which just simply identifies a pandemic that won't go away.
Well, I think, Tom, the easy way to put it is direction of travel. We're heading in the wrong direction. In Germany, in the UK and London, in New York with Governor Cuomo, warning people that we could be heading for a lockdown as well. And that's been a tug of war over the last couple of months. The outlook, the forward outlook, brighter. The news from Moderna, we're moving forward with that vaccine potentially later this week as well in the United States. So the vaccinations begin, Tom. They can't come quick enough. I think it was Governor Newsom in California yesterday said that the amount of doses they received yesterday of Pfizer was in line with the amount of cases they had on Sunday. That gives you an idea of how hard it will be to tackle this with speed.
We've got a great guest coming up here to really dive into the 2021 views that are out there. Lisa, there's only one view right now. I'm hearing it from every single guest, whatever their politics. We need fiscal support. Does that $700 billion number get any traction in the markets?
Well, I think that would be at least confirmation of the expectation that there'll be some bridge to the other side. And I think that seems to be what's baked in. The question, Tom, is what happens if they get nothing done, right? What happens if the stalemate continues into 2021 with the expectation of the January 5th elections, the runoffs in Georgia, possibly resulting in some kind of verdict? What happens to all those businesses that are forced to shut down because there are no customers and because the virus is spreading?
To me, it's just amazing here, folks. I mean, we've gone from X trillions of dollars down to a working number of 900 billion, and all of a sudden we're 20% below that. John, it is about the real economy. John, seriously, from where you sit, we're making jokes about it, but this isn't funny. You had a United Kingdom with a drop in GDP that went back to Queen Anne and I believe 1709. Is there any sense of economic stability in your United Kingdom?
No, there's a sense that it could get worse now that London is going into the toughest restrictions over the next week, Tom. That starts tonight at midnight, going into Wednesday morning. Things could get worse in the near term. This market's not priced off that, though. There's two economies, Tom. There's the economy you and I are talking about at the moment, the one we're living in, and there's the economy in the back half of 21 that this market's been living in for the last 6 weeks. And it's a great place. And I hope we get there, and I hope we get there faster than that. But that's the story.
Well,
and that's where the tension is, and that's why it feels so uncomfortable as well.
The bridge to late 2021, this conversation John and I had, I believe we had in April, looking for a bridge to July. Forget about that. I did the extrapolation of the 300,000 deaths in the United States. You can do that off the Bloomberg terminal, did it logarithmic, blah, blah, blah. And all you need to know is 400,000 is in the vicinity of the third week of March, which I know is truly unimaginable, but that's the way the math falls. She knows her math better than good. From the London School of Economics, Seema Shah joins us with Principal Global, her work with Her Majesty's Treasury, with PricewaterhouseCoopers, and now holding fort at Principal. Seema, I thought your note was extremely nuanced and devolved down to the selective of 2021. What will win in 2021?
Tom, I'm sorry, you cut out right then when you asked the question. Could you repeat that?
Oh, well, it sounds like that's what Pharaoh does to me all the time, so I'll let you do it as well. What does 2021 look like if you are so selective? What will be the winning area, the winning sector of 2021?
Yeah, Tom, it's such an important question going into 2021. Look, we are actually still, I know this is probably shocking to a lot of you, is we still like mega cap tech, right? It's not our favorite, but we still think it's really important that you have an allocation there because we think there's a lot of speed bumps along the way. On the road to the vaccine, it's not a very, very smooth one. We also like cyclicals, right? So cyclicals, small cap, within the cyclical value space, we like financials. But more than anything, next year, because of all the pandemic scarring, all the problems that are coming up, bankruptcies, labor market problems, the most important thing is just distinguishing between good companies and bad companies. And that sounds really obvious, but some companies are going to have taken on some horrible debt that at some point will come to the surface. So you need companies that can weather the storm, which is still going on through the first half of 2021, and are able to come out on the other side of that in one part.
Seema, I do not hear the confidence that I've heard over the last few weeks on this program and elsewhere about that full rotation into cyclical assets, into risk as well. What do you think some people are missing, Seema?
So I think look, rightfully, the vaccine, if it's successfully distributed, it's a game changer, right? But I think the road to that is difficult. So we have to think about all the question marks that there are still about logistics, about mass distribution, about mass manufacturing. So all of that takes you through to about kind of the Q1 of next year, but it's not enough to stop the winter virus going on. So this winter wave that we're all embroiled in, that you're seeing restrictions, as you said, in London, where I am as well, the restrictions keep coming. So we can't get through the winter virus wave, even despite the vaccine. And then on top of that, which to us is the biggest problem, is vaccine acceptancy. You know, a lot of global surveys are suggesting that only about 70%, even not less in some countries, would actually be willing to take the vaccine. So you've still got problems continuing through to the second half of the year. So yes, there is certainly some good news, but you still need to have a little bit of protection within your portfolios.
So, Lisa, this is huge because we were poring over the Bank of America Fund Manager Survey early this morning. And, Lisa, what jumped out is when people think the economy will start to improve. And they've got their finger on Q2 next year. That's where the crowd, are starting to think about an economy starting to improve off the back of vaccinations.
Yeah, and really, when you look at Oxford Economics, they put out a projection for what the proportion of people would be vaccinated by then. It's not that critical mass yet. Seema, your note seems to go away from the consensus that John and I were talking about that's the strongest ever when it comes to certain trades, at least on this fund manager survey. And I'm wondering, is this a tactical positioning, kind of trying to take advantage of the overweights in small caps in the move into cyclicals, going against that, buying tech, going against the go to Europe trade, buying the US? Is this something that's a long-term trade or a short-term trade?
That's a great question. So I think some of it is certainly a long-term. So look, we believe in the strength of mega cap tech until the regulations really start to turn against it. And I think we've still got a bit of time before then. We still like the US, and I think that's more of a structural space that we like. Europe, it should be doing really well, but it's just a perennial disappointment. And we think that the macro story just continues to weigh it down. Emerging markets, on the other hand, that's a real structural and cyclical play. The structural blocks have been building up for many, many years, but what makes 2021 special for EM is that the cyclical story is coming together with or without the vaccine. Again, it's really important to pick your regions, pick your countries. But if you look at emerging Asia, things are really coming together as long as you think that a dollar is going to be weak next year.
Is the pop in revenue, or is the pop in surprisingly good margins because of the actions of corporations?
Yeah, look, yes, there is a lot of, I think there's still some movement within margins. You've got to look at the companies. What have they been doing for the last year? How have they been managing? A lot of I think this is the one thing, is that one of the key risks for next year, as well as, potentially premature Fed tightening, which I know a lot of people are worried about. But the other thing is that companies who have made it through 2020, when you get into 2021, some of them may just find it too difficult to keep going. This has been going for 9 months. Some companies can keep on for that long. So I think we're starting to see some companies throwing the towel in. We expect to see in a lot of European countries unemployment rates start to rise, and companies will be struggling through the first quarter of next year.
Seema, fantastic to catch up. Stay well, won't you? Seema Shah there, Principal Global Investments Chief Strategist on the outlook for next year, with a lot more nuance, Tom, than we've heard over the last month, that's for sure.
I really can't say, we make jokes about it, John, and folks, we've got this thing going where Pharaoh and Lisa read everything and I don't. That would be a complete fiction. But there's some real there's some real nuances here. I would suggest you look at what Seema Shah did, and really a nuanced note, versus Credit Suisse, where those guys are looking for tech to sustain. And, you go house to house. David Costin looking out 2 years, 3 years out. There's real nuances house to house. It's worth watching the real yield. It's worth watching Bloomberg surveillance.
Tom. Thanks, Tom. Since this show has gone totally off the rails, let me take it further. Just heard from Gershon Distenfeld of Alliance Bernstein, who, if our producers, of course, can hear me, please reach out to him, send him a message and get him on the phone in about 20 minutes. He's made the final table in Vegas in 2 weeks of the main event of the World Series of Poker. It will be on ESPN.
Oh, my goodness.
And he tells me the prize money will be $1.5 million plus another $1 million if you beat the winner of the international bracket.
Wait.
So Gershon is also a handy poker player as well. So I'm hoping that we can get him on the phone shortly to talk about this.
It's like the Queen's Gambit, but, with Gershon.
Something like that.
It's great.
With cards.
That's where you can make money, I guess.
Gershon seems to be doing very well. I hope that we can get him on the phone in about 20 minutes and we can discuss with him.
Or what is his...
If, of course, he's telling the truth. I mean, this comes from Gershon himself, so who knows? He plays plenty of tricks on me. I've got no idea if he's serious or not, but it seems that Gershon might be on ESPN playing poker in a couple of weeks' time, Lisa.
Tom, I will say this. Maybe some of that triple leverage cash can be a tactical allocation to
it can be a
poker.
tactical allocation. I am the worst poker player known to mankind. I learned this like I was 17 years old. I got fleeced. I lost all my budget for the first semester in Boulder, Colorado.
Do go on.
Were you having a drink?
Oh, yeah, I was having that Coors Light. Yeah, Coors Light. I mean, 3-2 beer. John, you are so lucky you missed 3-2 beer.
It was 8 a.m.
I can't imagine you ever drinking Coors Light.
It was before Coors Light. John, I'm so old, it was before Coors Light. David Malpass and I...
who you are, in my head, since you were about 12. Bow tie, scotch, strumming a guitar badly.
It's true.
That's just
badly,
for the last 60 years.
3-2 beer,
That's who
John.
Tom
It's an
Keane is.
American experience. Tulagi's,
Okay. I'll do my
Boulder.
best when I'm back.
Be there.
Sounds awesome.
The
You're
Sink.
selling it.
Be
Futures
there.
up 24. We're up 6/7
It's gonna
This
snow.
is Bloomberg.
With the First Wave News, I'm Emma Chandra. The Food and Drug Administration says Moderna's coronavirus vaccine is safe and effective. The agency released briefing documents today on the shot. Next up for the Moderna vaccine, an FDA advisory panel will look at the data later this week. A recommendation could lead to the vaccine being approved for use in the US. President-elect Joe Biden says it is time to turn the page on what he called an unprecedented assault on democracy. Biden spoke hours after the Electoral College sealed his win. He noted that he won 306 Electoral College votes, the same as President Trump did in 2016.
At the time, President Trump called his the Electoral College tally a landslide. By his own standards, these numbers represented a clear victory then, and I respectfully suggest they do so now.
President Trump offered no public reaction to the Electoral College vote. President Trump praised outgoing Attorney General William Barr for having done a, quote, outstanding job. Still, Barr is leaving office later this month after having crossed the president on two key issues: his claims of voter fraud and the investigation into Joe Biden's son. The president criticized Barr in an interview last weekend. The crude oil glut left behind by the coronavirus pandemic will clear by the end of next year. That's according to the International Energy Agency. Still, the IEA says demand will be lower for longer than expected. The agency trimmed forecast for world fuel consumption following a new wave of lockdowns. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This vaccine has gone through clinical trials much larger than many vaccine trials. It's gone through the drug company's checks. It's gone through an independent data and safety monitoring board. It's gone through the FDA's independent advisory committee.
Alex Azar, Health and Human Services Secretary, trying to reinstill some confidence in the process that's going to roll out in the next couple of months as vaccines begin in the United States of America. For our audience worldwide this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. The story of the market so far this morning, a good one for risk assets, up by about 6, call it 0.7% on the S&P 500. We're up 24 points after 4 straight days of losses on the benchmark in America. In the FX market, euro dollar coming in. We give up the gains in the morning. Euro dollar now down about 0.1%, 121.35. And in the bond market, yields still just a little bit higher. We hang out at about 90 basis points on a US 10-year. Going into that Federal Reserve decision tomorrow, the long end waiting to see if we get any clarity around that asset purchase program, Tom, because that could be a powerful force going into 2021. If the Fed is hands off and the vaccine rollout is effective and fast, yields are going one place, and it's not down quickly.
Yeah, I take your point, John. It really is about the vaccine, the efficacy of it, getting it distributed and seeing what the end results are. Dr. Passaretti, a bit ago, maybe 40 minutes ago, telling us that the second shot is 3 weeks out. What we've again tried to do is talk to pros, and Robert Califf is that. To say he's with the FDA formally, to say he's at Duke University and the work he's done with Google Health is one thing. What you need to know is he is expert in cardiology and particularly expert at the nitty-gritty of clinical trials, and we're thrilled that he could join us this morning. Robert Califf, I want you to give a score to the FDA on what we've seen in the recent weeks. It seems every article in the media is skewed by politics or emotion or an angle. You're the grizzled pro. How is your FDA done?
I think what's remarkable about this is that the workforce of the FDA, 17,000 strong, has done an A-plus job. The politics have swirled around. There's been a lot of stuff in the press and pressure and all this, but fundamentally the FDA worked with the industry to do the right development of the vaccines, the right clinical trials, and they've thoroughly assessed in the public view the results of the clinical trials. So I'd give the workforce an A+.
Within your work in cardiology and the worries of shock, and I'm going to say a grim thing of anaphylactic shock and such, is there cardiac risk to the taking of the vaccine?
You know, there's a remote possibility there might be some tiny little cardiac risk, you know, for some people, but it would be a very rare thing if it happened. Remember, we have tens of thousands of people who have been in the clinical trials, not an evidence of any toxicity really at all, other than some side effects you would normally see with a vaccine. So if there is a risk, it's very, very, very small. But, you know, when you vaccinate millions of people, you will see, you know, some rare events that occur with almost any vaccine. Well, that's so far outweighed by the benefits that we're seeing.
Dr. Califf, sort of the heart of the question is, will this vaccine be any more dangerous because the process was expedited? That is the fear of some people who perhaps are unwilling to take the vaccine. What do you say to them?
Well, we can have 100% confidence that it's not more dangerous for the first 2 months because we have the data. I mean, although the review was expedited, the trial was done like any other, or the trials really were done like any other clinical trials. They were randomized, placebo-controlled. The participants were very carefully followed up. Everything that happened was recorded. It's there in the public view. It's been analyzed independently by the FDA, which, remember, is a really important role for the FDA. It's not just the company analyzing the data or even the researchers. You have this third check of the FDA itself doing an independent analysis. So people should really be comfortable that, we've got a lot of data showing that this is a safe and effective vaccine.
Dr. Califf, in the meantime, we can see the number of cases rising dramatically, leading to shutdowns around the world. How quickly will this vaccine make a difference and actually change the trajectory of the pandemic?
Well, you've heard a lot of talk from people, which I think is quite appropriate, that it's likely to be late spring, really before we have a major effect. But it's not right to think of this as just sort of a binary yes or no sort of a thing. We'll see a gradual reduction in the transmission of the virus as the number of people who are vaccinated increases, combined with the number of people that have already been infected. And we can't forget, probably most important of all, during the vaccination period, as we're rolling all these people through, which has to be done carefully, social distancing and wearing a mask will make an enormous difference in the number of people who die between now and the time when the pandemic is quelled.
Robert Califf, at the margin, how do we convince or force anti-vaxxers to get back into society with vaccinations? Is it the job of government? Is it the job of business? Is it the easy job of transportation that says you're not getting on the whatever if you don't have a vaccine? What do you see as the mechanism to drag anti-vaxxers into a vaccination process?
Well, first of all, I think we got to separate anti-vaxxers from people who are hesitant. Those are two groups. People who are deeply imbued in the ideology of anti-vax, I don't think we're going to change their minds. And I don't even think it's necessary for the most part that we force them to get vaccinated. We really need to focus on the people who are concerned and just, want to be sure that what they're doing is in the best interests of themselves, their families, and everybody else. And I think, there's a massive campaign already underway to get knowledgeable people to speak out. Very important in all of this are the clinicians, the doctors, the nurses, respiratory therapists, people who know about healthcare and are going to be first in line to get vaccinated. As we were talking earlier, my son, who's an emergency medicine doc, is getting vaccinated on Thursday. Most people I've talked with, even sophisticated professors back at Duke University, what they tell me is, I'm going to ask my doctor. For other people, it may be the nurse that they see frequently. We've got to really provide the human face to this information and about how important it is.
Measured conversations like this one are important as well, so we appreciate your time, sir. Thank you. Robert Califf there, former FDA commissioner. Tom, to your point, will this be mandated by government? Will it be enforced by corporations? I think we already got a flavour of this a month or so ago when Qantas Airlines, the chief exec of that company, said, if you want to get an international flight at some point, we will require you to have a COVID-19 vaccine. I have no idea whether everyone follows or if they'll indeed follow through with that, Tom, but that's just a flavour, a sense of where things could be heading.
Yeah, I agree totally. And the Qantas, of course, making a lot of headlines there, and you wonder what the next mechanisms are. We've been so busy this morning, John. This Moderna headline this morning, it's important.
It is important. Hopefully, we get another nod for another vaccine before the weekend in the United States of America. For our audience worldwide this morning, good morning. New York looking glorious. This is Bloomberg.
Well, the main instruments on board include a dual frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise, but also the waves. The significant wave height, which is the top 1/3 of the waves, if you were to look at them in time.
Sea level rise is accelerating, and it is not geographically uniform. In some regions, the rate of rise is 2 to 3 times faster than the global mean. This means that in this region, the elevation since the beginning of the 90s is now nearly 30 centimeters.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
From New York and London for our audience worldwide, good morning to you all. This is Bloomberg Surveillance live on Bloomberg TV and radio, and here's the price action. Futures up 0.7% after 4 days of losses on the S&P, the longest losing streak on a daily basis since September. We bounced back a little bit. I mentioned this yesterday. I think it's worth repeating. The consensus target coming into 2020 was 32.80 on the S&P 500, 36.65. The consensus target was 32.80 before anyone even knew about COVID-19 in this market. I still can't get my head around that, but that's the story right now. Switch up the board. Just quickly, the S&P up on the year by about 12.9%. Big advance off the back of a huge policy response, and that's been the story. And that's the story for the long end of this curve as well. 10-year yields about 90 basis points, basically unchanged on the day. 30-year yields about 164, up about a basis point on the session. It's about the next 24 hours. Tomorrow morning, we'll get a retail sales print for the United States of America. 24 hours from now, a lot of people think that retail sales print will be negative. The month-on-month read could be negative. So it's about the economic data for the long end, and it's about the Federal Reserve as well. And Tom, we've talked about it repeatedly through the last couple of months. We want that clarity on the asset purchase program from the Federal Reserve. One, will we get it? And two, will they extend the average maturity of the bond buying, which basically means if you're looking for that, yields up, curve steeper, you might be a little bit disappointed.
Well, I go to the data. You talk about 24 hours. John Farrell, I would look at 24 days. That gets us through December, and a late jobs report in January. January 8, I believe, is the date calendar. Michael Gapin joins us now with Barclays, their chief U.S. economist. Michael, you look at December, and then you've got this wonderful phrase, looking at the hope that's out there. What's the character of our hope right now, and will our hopes be dashed?
No, I don't think our hopes will be dashed, but I do think the next several months will be difficult. The data is slowing, momentum is ebbing. Restrictions on activity are decreasing mobility. It is showing up in some of the higher frequency data points, but obviously I think that the hope and the optimism around the medium term is anchored around vaccines, which are now being distributed. So we still have this blend of kind of near-term pessimism with medium-term optimism. Given what we know, I don't think those hopes are going to be dashed on on the rocks of the shore. I do think we'll get there, but it's going to be bumpy to get there.
Yeah, and certainly when you talk about bumpy, another sign of it is that there seems to be a little bit more weakness in the manufacturing sector. According to data that just came out, the Empire Manufacturing Survey came in at 4.9 versus 6.3. It came in lower, and this is the first read to really get a sense of the December data. Michael, how much are you counting on manufacturing to remain robust as services are unable to employ people and really take off as people try to social distance?
Hi, Lisa. Thanks for that. Yes, we are actually depending on it. It's our view that manufacturing and factory output still has room to run to catch up with where demand is. Industrial production is roughly 5% below where we were in February, despite the strong demand from households for goods. So we are expecting the manufacturing data to hold up, even as some of that personal spending data fades. We think factory output still has room to pick up as well, and not just to meet demand, but replenish inventories, which have been down for 4 quarters. So we are counting on it to some degree to kind of hold things in place until services sector activity is freed up, which is likely going to come more at the end of the first quarter.
Still work to do for fiscal authorities. And Michael, some people think maybe for the Federal Reserve as well. What do you expect on the forward guidance front in 24 hours' time?
I think just something that qualitatively ties how long the Fed will be buying assets to achieving the dual mandate. I mean, as you know, they've anchored rate hikes around thresholds, achieving maximum employment, getting inflation to 2, expecting an overshoot of inflation. So I think really all they want to say is we're going to keep buying until we're confident that we're on the path to that outcome. So right now they're just saying we're buying assets over the coming months. That's not long enough of a time horizon. So I think just something qualitative in nature about confidence that the economy is on a recovery path and we expect to be meeting our dual mandate. To me, this is not a big change. I mean, I think this is more about aligning the language in the statement with where markets are already priced and with what Fed members are already saying. So I don't envision that this is any big change forthcoming from the Fed in terms of guidance.
So just to tie this all together, Michael, it seems like the consensus, as John and Tom have been talking about, is looking past the now and the pain and looking toward a post-pandemic world. What would you have to see in the higher frequency data to change that view and account for a greater degree of scarring?
I just think that for the Fed, at the end of the day, I think that it'd have to show up in the labor market. And so if as Tom mentioned, there's that late report in January that's going to come out around January 8th. If that shows a market deterioration, so we're losing jobs rather than adding them at a slower pace, then that I do think changes the calculus for the Fed. So if we're losing jobs and then they may feel more inclined to do something as we move into March, whether that's change the composition or increase the pace of purchases. My guess is that would also light a fire under fiscal policy if we don't have a package in place by that point. So I think in the end it would come back to the labor market.
Michael, always appreciate your time, sir, and it's great to catch up as always. Michael Gapin there, Barclays chief US economist. About 20 minutes ago I said we had some breaking news. I'm sure we can build on that story right now with Gershon Distenfeld, who part-time works for Alliance Bernstein, the co-head of fixed income, and now I understand full-time is a poker player. The final 9 of 2020 World Series of Poker, and Gershon Distenfeld gets a seat at the table. Gershon, can you walk me through your news, please, sir? And it's great to break this news on Bloomberg Surveillance, I've got to say.
Good morning, John. How are you?
Very well. Probably not as good as you.
Well, I've had an interesting past 48 hours. So I had the opportunity this year, since it was a little bit of a condensed version this year, the World Series of Poker main event. Most of it was played online until they got down to the final 9 players. I had the opportunity to play online since it was only 2 days of very intense poker. Usually it's held over a period of 10 days live. I don't usually have 10 days due to my very intense job. I was able to play, and I made the final table. Poker is a lot like investing. It's making decisions based on probability with incomplete information. There are a lot of parallels. So I've dabbled in poker over the years. Haven't had the time to play as much as I'd like due to the fact that my full-time job is in investing. But I was very gratified to be able to make a final table. I'm very excited about it.
Gershon, congratulations. And, maybe it's like the Queen's Gambit where she sees the chess pieces on the ceiling and you see cards and aces on the ceiling floating around as well. What's the number one mistake the 700 people made who didn't make it? What's the number one thing not to do in losing money at poker?
Well, I think it's the same thing as in investing. It's thinking that you know too much. Being overconfident, thinking that you know exactly what the other person has, thinking that you know the exact right move. I think realizing that the future is uncertain, realizing you don't know exactly what the next card's going to come, and estimating probabilities. And look, like in life and like in poker, there is a certain amount of uncertainty, and you do need there's a little bit of luck involved, or maybe sometimes a lot of luck, but in the end, skill does win out.
All right. Well, Gershon, I'm going to be, I don't know, Debbie Downer, but I want to make the analogy. You said that you have to know what you don't know and know when you're overconfident. Do you feel like there is too much confidence right now in markets?
Well, I don't know about now. I think there's too much confidence in general. People believe that they know everything. There's just too many pieces of information. I think humans are hardwired. I think you guys know from our previous discussions. I've studied a lot of behavioral finance. People are hardwired to deal in stories. We like to create a mosaic. We pick out a couple of pieces. The Fed's going to do this.
Right.
Our politicians are going to do that. Therefore, Z is going to happen. X and Y and Z. And the world's a lot more complex. One of the most influential things that I've read in my life, books I've read, is a book by a former poker player, although it's not really a poker book, called Thinking in Bets by Annie Duke. It's something that I would recommend to everyone. It talks about how in life you have to look at everything as a series of decisions. Realizing that there's a lot you know, but for everything you know, there's so much more that you don't know.
Right.
And if you take that approach to life, to investing, to poker, whatever it is, not only will you make better decisions, you'll also be a lot happier when things don't go your way.
Gershon, one of my divorce lawyers said, read that book. Gershon, I want to look, Gershon, at the great Ed Thorpe. I had the honor, 88 years old now, I had the honor of interviewing Ed Thorpe years ago. He was definitive in quantitative finance with Paul Wilmot, Nassim Taleb, and others. What'd you learn from Ed Thorpe?
Well, I've learned a lot from. I haven't read Ed Thorpe tremendously. I've learned a lot from many authors. I tend to learn from those that are less certain about things. I think when people are in general are put out a thesis and they're so sure of themselves, you tend to doubt things. I've always found in my career I've learned the most from people that are humble and from those that realize that there's a lot more they don't know than they do know.
Gershon, always great to catch up with you, sir. I was going to finish with a year-end target on the S&P 500 for 21 and see if you responded with confidence and conviction, but I doubt it. Gershon, it's always great to catch up, and good luck, sir.
Good luck.
I'll be in touch, no doubt. We'll talk about it. Good luck. That was spirited, wasn't it? Good luck. Good luck.
I think it's fabulous.
What's that?
No, good luck.
What was that, Tom? What was that?
I'm picking up snowshoes.
What's wrong? Snowshoes?
We're going to snow. Lisa's got the Alpine tubular snowshoes, the ones with a hinge on the heel and all that for when she's portaging with a canoe. I'm looking at the wood ones, Wilcox and somebody. Ash, hand-done snowshoes.
Yeah.
Wood shoes?
Yeah, they wanted me to get in a Motel 6 right near to where we are. For the
I think I'm
big
staying there too.
Coming. Yeah, so I'm just going to walk to work. I'm going to snowshoe to work.
John's just...
You done?
Checking out.
No, we're just, we're getting ready for the week. It's a big week.
I'm checking out.
He's like, I'm done, peace.
Been checked out since 6:59:30.
Nice, that's not true.
Before the show started. Just firmly checked out. I get to check out now in about 2 minutes. I'm stepping away. I'm done.
Please, to one of your other properties.
I'm done. Play the music. What's that music? Play the music.
We can talk about markets.
I'm looking at 2-year
Play
yield.
the music. There's the music.
Look at that.
2-year yield
That's
matters.
just glorious.
Look at that.
Turn that music up just a little bit.
Stocks are up.
That is glorious. That music has never sounded better. Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Farrow. This
I don't think it's the same
Bloomberg.
Liverpool. I just don't think it's the same Liverpool.
With the First Word News, I'm Emma Chandra. Joe Biden is calling on the American people to accept the outcome of the presidential election. Hours after the Electoral College sealed his victory, Biden called on the country to, quote, turn the page on what he called an unprecedented assault on democracy. President Trump had no public reaction to the vote. It turns out more U.S. agencies were targeted by Russian hackers. The Department of Homeland Security was hit, and the New York Times says so were parts of the Defense Department. Meanwhile, the Washington Post says that the State Department and the National Institutes of Health were also hacked. Federal agencies have been told to disconnect their solar wind software that the Russians manipulated to break into their networks. In China, the economic recovery is picking up steam. Industrial output was up 7% and retail sales grew 5%. China's economy is likely to be the only major one to expand this year. It's being boosted by strong demand both at home and abroad. The City of London could face the toughest coronavirus restrictions as early as tomorrow. Infections have spread out of control and hospitalizations are rising. Under the so-called Tier 3 limits, pubs, bars, restaurants and indoor entertainment venues would be forced to close. And it's the latest sign that the U.S. economy is hitting a snag. A growing percentage of American homeowners are looking to delay mortgage payments. In the first week of December, the proportion of mortgage borrowers that began seeking relief rose to its highest level since August. That's according to the Mortgage Bankers Association and could eventually lead to more closures. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
With a new administration coming to Washington, changes are undoubtedly in store, from the economy to foreign policy to public health. I'm David Weston. Join me for a Balance of Power special report, a look ahead to the next 4 years, this weekend on Bloomberg Television.
The Chinese market will never be like the international market in its entirety. The international market will never be able to suit into a Chinese market, but there will be enough, middle ground where they do intersect. It is in that intersection that Hong Kong have to find its the most relevant role to play.
That was Charles Lee, the CEO of the Hong Kong Exchange. For our audience worldwide this morning, good morning to you all. Alongside a vocal Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Coming up a little bit later on a programme all by myself, Kate Moore of BlackRock will be joining us on Bloomberg TV, and I'm very much looking forward to that conversation, Tom.
I'm sorry,
please.
Charles Lee's
Go
life
for it.
has changed. Charles Lee's life has changed. It was interesting to hear that. I mean, Hong Kong 2021, what's it look like? I don't know.
It has changed a lot already this year.
How many more days, John? 3?
This is 3. He's counting them. He's counting
3
the
after
hours.
this one.
He's got a clock. He's got a clock in London counting down. Lisa, John, go away. The open rates here.
The real calendar.
Some market reaction. Futures up 25.
3 more days left with Tom.
Okay, come on. I'm talking. You're interrupting again. S&P up 25. Dow futures up 162. On Bloomberg Radio and Bloomberg Television now, we're going to do what we love to do with one Barry Ritholtz. And that is rip up the script. You can do that with him. He's a wonderful read on the street. Of course, his podcasts have been really, really interesting. Barry, there was a young child at St. Paul's in Concord years ago whose parents, like a lot of other parents, played cards. But what she did was turn the card playing into a life work. Anna Duke, and of course, the book we were just talking to Gershon Distenfeld about. You interviewed her years ago about poker and about our behavior. This is a year, Barry, where we need Ms. Duke to tell us how to behave into the next year. What would she say?
Well, probably the single biggest takeaway I got from the book was what she described as, quote, resulting. Resulting is the tendency that poker players and investors have when they look at the outcome of a variable. They look at the result and they draw the conclusion that what they should have done was what would have led to that result, completely ignoring all the unknowns, all the variables, all the randomness that may have led to that result. And it just discounts the idea of thinking in terms of probabilities, and that's what investors are supposed to do.
She's done all sorts of work out of Pennsylvania in psychology, folks. This is really heavyweight academics, but there's a book that's really, really accessible. John was talking that up with Mr. Distenfeld on his way to Las Vegas and Pokerdom here in a minute. I mean, thinking in bets, and Barry, the big bet is a single digit or lousy, go to cash 2020. A huge body of people got that wrong. What's your bet for 2021?
You know, the fact that the calendar year is flipping over in December is absolutely meaningless to these longer-term underlying trends that drive the economy, that drive corporate profits, that drive the stock market.
Stop.
So
Guys,
really
this is critical. We're going to pick it up with Barry. What he just said there, folks, is absolutely the most important thing in investing. Forget about the calendar. Barry, go.
So what's the underlying driver of the current market and the current economy? We've previously discussed the K-shaped recovery where the 30% or so of people who can work from home, the white-collar professional workers are doing fine. Everybody else who's forced into a furlough or layoff situation because of the pandemic are not. We now have the vaccine in the United States. We're now seeing it begin to be distributed by sometime next year. Let's call it the second quarter. I'm just guessing. We're going to begin the process of getting back to normal. How much of that is already built into the stock market is really anybody's guess. We've been anticipating this for a while, but we could start to look at things from a more traditional perspective and stop just spitballing as to what happens next.
Yeah.
At least the economy will start to resemble something approaching normal with a whole bunch of caveats.
Well, just to sort of complete the theme here of thinking in bets and making smarter decisions, with the moment that we're in where there is such a heavy consensus about that more optimistic moment that you say is increasingly priced into markets, does it make sense to try to go against the consensus just by virtue of positioning and probability? Or is this really a much trickier equation when you look at the scene at hand?
You know, I've made a couple of those bets over the course of my career, and they're always nerve-wracking. And one of the things you learn when you are on the opposite side of the trade from the crowd is that for the most part, the crowd gets it right. You know, it's not a coincidence that momentum and persistency and trends are such important parts of trading. It's not usually a minute-by-minute or day-by-day energy that's driving a particular sector or market or economy. It's big, broad secular trends that are pushing things in a given direction. And so guessing when that trend ends, and I use the term guessing very precisely, making that bet against the crowd, you know, there's a very brief moment when you could do that and be right. Most of the time, it's a challenging and money-losing exercise.
Thanks so much, Barry Ritholtz. Really love that. And, of course, the value of his podcast, they have the quality of Annie Duke and many, many others. I can't say enough about Mr. Ritholtz as a habit for a 40, 50, 60-minute conversation with some of these experts. So futures up 26, they advanced. Dow futures up 165, as John mentioned, 4 days down. And Lisa, again, I've got to admit, I'm not really focused on the market data so much with the news flow that we're seeing right now, and particularly on the pandemic. You know, I kid you about grim, but I'm sorry, Lisa, it's grim, isn't it?
Well, it's grim and hopeful. I mean, this is sort of the binary of 2020 that we're in December 2020, this idea that, yes, the pandemic numbers are getting worse, but the Moderna vaccine, which the FDA came out this morning and said seems to be effective and safe, is a big deal. Because the key aspect, and Tom, you've picked up on this, is that it doesn't have to be refrigerated at the incredibly cold temperatures as the Pfizer vaccine, which means that perhaps it can have a distribution process that's a little bit easier. These are key aspects in trying to get everybody vaccinated and get us all out and vacationing, and you back in your snowshoes, your wooden snowshoes that you're going to be trekking from Motel 6.
Yeah. You know, I'm looking at them. They got the short ones, and then they got the long ones with the big fancy tail. And
I can't wait.
You know,
keep them on.
They go down Park Avenue. I mean, you know, they don't work on Lexington, but they really work, frankly, on a snowy day. It's actually really beautiful, folks. The snow in Manhattan, when it really comes down for a number of hours until it's a mess, is really, really beautiful. We may see that here in a couple days. I want to run through the data. We've been remiss on that today. Futures up 28, Dow futures up 174, Dow out to 29,955. NASDAQ 100 shows some joy as well. German yields aren't really playing. U.S. yields, they play with a 2-year yield, 2 basis points, 0.91%. I'm going to call bonds a churn over the last couple days. Dollar, a churn over the last couple days. Commodities, a churn over the last couple days. You get the picture.
Any more churning?
Churning. Yeah, well, we'll see. Coming up on the pandemic, a serious conversation. Stephen Corwin, New York Presbyterian. Stay with us worldwide on Bloomberg Radio and Bloomberg Television.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now with futures up 26 on the S&P 500. We advance 0.7%, and we begin with the big issue. Vaccinations underway, the threat of lockdowns still lingering. Governor Cuomo with a warning for New York.
We could very well be headed to shutdown. And shutdown is something to worry about. That is really something to worry about. Because all these businesses close. We go back to where we were.
Similar warnings echoing throughout the nation, with infections surging, the pressure rising. Americans awaiting support, looking to Congress for action. A chorus of lawmakers calling on leadership to get it done.
This is our consensus bill. We all agree on it. It's ready to go.
Everyone says, why didn't you do this or why didn't you do that? We strictly looked at everything that was going to expire at the end of this month.
There's no excuse for either the speaker or the leader. You've got it. Give us a vote.
Now it's up to the leadership to take it and make this happen in a timely basis.
Don't let us go home for Christmas without a vote on this.
Republican leadership echoing that sentiment, writing in a statement, quote, "It is time for Republicans and Democrats in the Senate and House to find consensus on COVID relief before the holidays. We hope our Democrat counterparts share our sense of urgency." President-elect Joe Biden looking to move past the post-election turbulence and focusing firmly on the future.
There's urgent work in front of us. Getting this pandemic under control and getting the nation vaccinated against this virus. Delivering immediate economic help so badly needed by so many Americans who are hurting today. And then building our economy back better than it ever was.
It's badly needed, but will we get it? The Bloomberg team stands by. Kevin Cirilli and Kelly Lyons. Kevin, let's talk about it. Progress over the last couple of weeks. You've got to say we've had progress. Can we make this happen?
Lawmakers, but a quote-unquote Christmas miracle in order to get fiscal stimulus support across the finish line between now and the end of the year. But it comes at a time in which rank-and-file members behind the scenes have been growing increasingly frustrated at leadership of both parties, from Speaker Pelosi as well as Leader McConnell, for there not being some type of fiscal stimulus deal that has been stalled for months. But their lack of ability to deploy political capital from a centrist perspective has left them frustrated and left their options limited, even as the outgoing administration, with Treasury Secretary Steven Mnuchin trying to push for some type of an agreement, also looks to be stalled, really, by leadership of both parties. The final point that I would make here, Jonathan, is that the calculation that both Speaker Pelosi and Leader McConnell are making involves January 5th in Georgia. They feel that that will help to inform their negotiating abilities heading into a new administration, and they're very reticent in order to get some type of an agreement across the finish line before Georgia casts their ballots.
Leadership looking lonely. Can they wait until January 5th? Kevin Cirilli, thank you, sir. Kaylee Lyons joins us now for the latest on the vaccinations. This is the story, Kaylee. We need to get out to a period where enough people are vaccinated to remove the restrictions, and then we can talk about not having fiscal aid. Pfizer, yes. Where's the rest?
Well, Moderna could be coming, John. At least that's every indication we've gotten this morning after an FDA staff report found that the vaccine is safe and effective. Now, a panel of advisors to the FDA will be voting on whether or not to recommend it come Thursday, which means that it could be the second COVID-19 vaccine approved by the U.S. by the end of this week. Moderna's candidate, of course, is similar to Pfizer's in that it uses messenger RNA. It had similar efficacy rate. And as we know, Pfizer's vaccine rollout has already begun. But John, to your point, it could be another 6 months before most of the population is vaccinated, or at least enough of the population to reach herd immunity. And in the meantime, the virus continues to rage really out of control in many parts of the U.S. Just yesterday, we hit the grim milestone of 300,000 deaths from COVID-19. And of the world's major economies, the U.S. has by far the highest number of cases per 1 million people, that number topping 50,000. In California, hospitalizations have jumped by 50% just since the start of December. 3 of the state's 5 designated regions are under mandatory lockdown. And as we just heard, Governor Andrew Cuomo saying New York could be headed back toward a second full lockdown as well. And this isn't just a phenomenon in the U.S. Cases are still continuing to rise really across the globe. Global cases now approaching 73 million. And on the other side of the Atlantic, where you are in London, John, as you know too well, the city's moving into Tier 3 restrictions tomorrow, the most severe of virus curves. And in Germany, also starting tomorrow, the country will enter a hard lockdown once again. And these restrictions really hitting just as economies were beginning to recover, John.
The restrictions are piling up. Kelly, thank you. Thank you very much. In this market right now, 25 minutes away from the opening bell, equities up 26 on the S&P. We advanced 0.7% on the S&P 500. Citi's Kristen Bitterly expecting the recovery to continue, fueling upsides in the cyclicals. She writes the following: we expect continued repricing of COVID cyclicals and the world economy to normalize in the second half of 2021. While we have seen quite a bit of rotation throughout November from COVID defensives into COVID cyclicals, we still see quite a bit of room to run. Kristen, I'm pleased to say, joins us right now. So, Kristen, can we just keep ignoring the bad news that's run in front of our faces through the next several months into the second half of next year?
It's really hard. You can't keep ignoring the bad news. It's something that's going to drive the market. It's going to drive volatility in the market. And so the number of increased cases, the increased deaths, especially news of potential lockdowns, we're going to see some choppy markets over the next couple of weeks. And I think fiscal stimulus is another part that is also obviously closely linked. But what the market is looking at is it's actually looking beyond into a post-COVID world. So while we will hear some pretty bad headlines, whether it has to do with COVID or actually has to do with politics for that matter, we believe that ultimately the vaccine and the vaccine story and the eventual abatement of the pandemic is what's going to drive markets.
What's the biggest difference between the post-COVID world and the pre-COVID world?
So the biggest difference that we're seeing, and where we actually don't feel that people are properly positioned, like you mentioned, there was a strong rotation in November. The minute that we heard about this Pfizer vaccine, we saw one of the most violent rotations into value, into the COVID cyclical stocks, as we call them. But the truth of the matter is there's still a lot of room left to run. So when we look at the differential in these sectors, right? So finance lagging 20% behind the broad-based market, real estate lagging 20%, industrial 6%. You look beyond and you start looking at international markets, which is an area where we are putting capital to work. So emerging markets, even Latin America, the differential in Brazilian equities is 40%. So the key thing is actually finding these pockets that once we are in a post-COVID world, you want to have some of your exposure in your portfolio today and not wait until it's too late.
So in a pre-COVID world, financials were lagging big tech. In a pre-COVID world, Europe was lagging the United States. I'm trying to understand what's different about the fundamental backdrop, the story, the price of that story, post-COVID, in this world that we're trying to live in the second half of 2021, compared to where we were, Kristen, because I heard these stories for much of the last 10 years.
Yeah, you've probably heard them for much of the last 10 years or even the last year. I think the one thing that everyone has to put into perspective with COVID is just remembering that it's an exogenous shock that over the past several months has repriced every single asset out there, every single sector. Some being wild beneficiaries of that, some being actually quite penalized. And so what we've seen over the past several months is actually a disparity and a decoupling of correlation to the tune of 100%. So there's certain sectors where that differential in performance is 100%. Well, that has narrowed to around 70%. There's still more for that to normalize to even get us back to the position that we were at the beginning of 2019. There's still big, or the beginning of 2020, I should say. There's still a big disparity there, and that's the gap that we actually think will close.
So that's the catch-up trade, Kristen. Then there's the next leg, whether you stick with that rotation beyond just the catch-up trade, and we've discussed that so many times. We've exhausted that conversation on this show. Tomorrow we'll hear from the Fed. The Fed's basically told us for the last 6 months they're not going to hike rates anytime soon. Even if things get better, they won't step back in and push up borrowing costs. That's the story from the Federal Reserve. I'm trying to understand, in what environment where a Federal Reserve isn't raising interest rates, can that be good for financials in America? And forgive me for going on just for a little longer here, Kristen. In the previous decade, the US was the exception. It was able to engineer a recovery that actually led to higher interest rates. Europe couldn't do it. Japan could not do it. And in that environment, even with exceptionally low interest rates, European equities weren't exactly on fire. And I'm trying to understand, Kristen, why we're applying the same logic that we would have applied to Europe over the last 10 years and just got the story badly wrong to the United States as a trade for the next 18 months.
So I think with financials, it's really a story about the curve steepening and not necessarily short-term rates being anchored. We actually think that, of course, in line with what the Fed has been saying, and we expect them to continue to say, that you're going to see that anchoring of short-term rates where you really need a benefit for financials ultimately is in curve steepening. We could actually see some of that tomorrow, depending upon the outcome of whether or not they're extending duration and asset purchases. So I think watching the back end of the curve when it comes to financials is important. It's also looking at, again, going back to this post-COVID world and the recovery. That's something that has hit financials harder in this particular environment than anywhere else. So yes, to your point, it's a catch-up trade, but also once we see that curve steepening, once we see improved economic data or the continuation of improved economic data, we think that will actually help be a tailwind for financials. I think one thing, just going back to the rates environment, which is really important, and I just want to make sure that this is clear, we're not saying to sell out of those defensive stocks. We actually think that the defensive stocks, you need them in terms of getting through the next couple of months. That's the risk-off trade. The other interesting area, so we could talk about sectors. We could talk about financials, industrials, real estate, some of the higher beta areas of international markets. I think an interesting area, if you want to be a little bit more conservatively positioned, augment yield in your portfolio, is global dividend growers. So this is another area that typically, these are the strong companies, the quality companies that have high quality balance sheets and have been consistently increasing free cash flow, increasing their dividends. They still exist, and they have also lagged 20 percentage points versus broad-based equities. So that's an area where you can augment yield, increase your yield in your portfolio, and also provide some of that diversification out of US equities and also away from some of that concentration in COVID defensives.
Kristen, always sharp and always great to catch up with you. We appreciate your time. Kristen Biddley there of Citi. Let's get back to these markets. Up 25 on the S&P, about 20 minutes away from the opening bell at the market desk with your movers and some of the developing stories. Here's Abigail.
John, well, there certainly is a bullish mood to be had this morning, and of course it has to do with vaccine optimism. This morning the FDA said that the Moderna vaccine for COVID-19 is both safe and effective. They will be voting on it later this week on Thursday. It's largely expected that it will be granted the emergency authorization that Pfizer received last week, and then perhaps next week we will see the shipping and distribution of that Moderna vaccine. So we see the shares of Moderna popping higher. Pfizer, however, lower. And interestingly, yesterday, John, after Pfizer, the distribution started here in the U.S., that stock closed down sharply lower, I believe by more than 4%. So a little bit of a sell the news there. As for some strength, that's the Apple complex. Apple popping higher on a Nikkei report that their phone production is likely to be boosted by 30%. That's taking the entire complex higher, all of those Apple suppliers, making it unusual. The Nikkei usually has a bearish slant toward Apple. Not today. Apple popping higher, John.
The Apple complex. Abigail, thank you very much. Abigail Dillittle there. Much more from Abigail through the hour on this program. Coming up, trimming cash positions, embracing risk. How many times have you heard that on this show over the last couple of days, the last few months? Fund managers growing increasingly optimistic about the recovery, weighing in on that conversation. PIMCO's Erin Brown. For our audience worldwide, this is Bloomberg.
So it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Markets kind of figured out the pandemic. We have to make it through this struggle right now, but ultimately with vaccines and treatments and everything improving, we will get through. And some point next year, the economy should look very good. And that's why, again, even today, you're starting to see some of the small caps, value stocks continue to outperform big tech as this belief sinks in that, hey, we will have something that resembles a normal economy. There's a lot of reason for optimism.
Investors taking comfort in the vaccine rollout and potential return to normalcy. The FDA supplying another boost to sentiment, ruling Moderna's vaccine safe and effective, clearing the way for a second shot to gain emergency authorization, potentially accelerating the recovery that markets are increasingly betting on. Bank of America's latest fund manager survey providing additional insight, asking participants when the vaccine will start impacting the economy. 28% seeing that coming in Q1, 42% in 2Q, 19% in the third quarter. On this report is Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, if I could sum up the survey in one way, it would be bullish. Investors most optimistic on stocks since going back in January of 2018. Within equities, 31% are long small caps versus large caps. Also, they're shifting their allocation more toward value names like banks. I think we've heard this story before, John. It's the consensus we've been talking about so much lately. But that risk appetite extends beyond equities. Optimism on risk-on assets was the highest going back to February of 2011. And as investors look to put more money into risk assets, they are underweight cash for the first time since May of 2013. That cash allocation down to just 4%, and Bank of America saying that triggers a sell signal. Now, in fixed income, investors also expecting a steepening of the yield curve, 87% of them expecting higher long-term yields. That is a record. And as for what could be a tail risk going forward, COVID-19 still the biggest one seen, though fears about inflation and a fiscal policy drag are rising as well. Now, as for the most crowded trades, even despite all that conversation about value over growth, technology is still the biggest sector overweight. And when you look at the most crowded trades, long tech tops the list at 52%. It's followed up by short the dollar, and then, John, long Bitcoin coming in at number 3. So basically, John, this is just a continuation of the trend, because if you look at the way these assets have performed year to date, Bitcoin up 170%, the NASDAQ 100 up more than 40%, all while the dollar has weakened over the course of the year. And those right there are your very same crowded trades, John.
Kelly Lyons, thank you very much. Let's just run through that again. Kelly, thank you. 52% long tech, short the US dollar 17%. And then a not too distant third place, long Bitcoin, 15% of respondents long Bitcoin. We'll find some time for that a little bit later in 2021 maybe. PIMCO's Erin Brown publishing her 21 asset allocation outlook, expecting the early cycle recovery to provide a tailwind for risk assets. She writes the following: we remain overweight equities and have added selective exposure to more cyclical oriented sectors. We continue to see opportunities in sectors that may benefit from longer term disruptions, such as technology companies. Erin joins us right now. Erin, that's the outlook. We'll get to that in just a moment. I just want to ask you a question on how you would respond to the following. Governor Cuomo was pretty outspoken yesterday. So was Mayor Bill de Blasio. If we had New York shutting down, how do you think investors would respond to that?
Look, we've already been through this before in March and April earlier this year. So I think investors have become accustomed now to these disruptions in normal daily life. And certainly going into the holiday season, I think that most people expected that there would be more restrictions, particularly as we started to see cases picking up in the last month or so over the Thanksgiving holiday. So first, I don't think this should come as a surprise. Second, I think investors largely understand that it's going to be a bumpy road between now and the time where we have widespread vaccine adoption. And so I think that that is certainly baked into the expectation that we're likely to see growth slow over the next few months, the next quarter or so, and then start to gradually normalize and pick up as we move through 2021.
When do you think we need to see evidence of that pickup, Erin? If we're willing to look through the weakness in claims, in retail sales tomorrow, in the payrolls report that comes in early January, when do you need to see the pickup?
I think that you'll likely start to see the pickup in the second half of the first quarter. So as we move into March and then into April, where you start to see real adoption of the vaccine, that's when you're going to start to see the bottoming of the economic data and start to see the pickup into, really the second half of 2021. At PIMCO, we're expecting that we're going to return to pre-COVID levels of productivity and output in the second half of 2021, so in the third or the fourth quarter, which is well ahead of what we're expecting to see in Europe and broader developed markets.
And going into that, we're familiar with this story, the exposure to industrials, materials, semis, housing. Erin, what I didn't see in your report was energy, financials. Are they a factor in the mix as you add some cyclicality back into the portfolio going into 21?
So first, we do like to separate cyclical growth versus value. And oftentimes companies are value because, there's some type of impediment to growth. And so we're really looking for good quality cyclicals rather than just, putting all of our eggs into the value basket. When you look at financials, when you look at energy, I think that both of those sectors have problems for 2021 that are going to continue to impede growth and really keep them continuing to underperform. With the case of energy, we do believe that this is a sector where it's likely to be fairly range bound in terms of the total price of oil next year. And that's certainly going to weigh on the amount of profit growth that we expect in 2021. Certainly, you're going to see a catch-up trade in terms of sort of profitability growth, just given how much it's been hurt this year. But we're not expecting that to be widely sustained. In the case of financials, I think financials also have a problem because they've been disintermediated by the central banks, and certainly here in the U.S. by the Federal Reserve. And I think that is going to be able to cap the total profit growth that we see from financials this year. Certainly, we do expect that you'll see some curve steepening, and that should help, modestly, but it's not where we think that there's really going to be significant growth potential next year.
Erin, there's two risks on your radar around this portfolio that you've been building. One is lower growth, obviously. The other is higher inflation. How do you protect yourself against that?
Yeah, it's a great question, and it's one of the questions that we get most from investors right now. I think that there are ways to insulate your portfolio. One is through buying break-even inflation. That's one of the sort of simplest or most direct ways to buy inflation protection in portfolios. And despite the fact that you have seen a rebound in inflation over the last 3 to 4 months, it's still very cheap relative to its intrinsic value. Secondarily, gold still offers a good safe harbor for portfolios in the case of higher inflation, and that's another position that we have on currently in portfolios that we think will weather well if you start to see gradual inflation pick up. That said, we're not expecting inflation to be significant next year. We still think we're in a low inflation environment, but it is a risk for portfolios that you need to protect against.
Erin, always fantastic catching up with you. Can I just say thanks from me and the team for everything you've contributed to this show over the last year or so. Just absolutely brilliant. Erin, thank you. Erin Brown there of PIMCO. Coming up on this programme, the analyst action you need to know. That'll be next in our morning calls. And later, a consensus trade for 2021 is very well established now. That conversation still ahead with BlackRock's Kate Moore. This is Bloomberg.
Once it goes into this plant, it's heated up very quickly to 600 or so degrees. It basically carbonizes it, turns it into a carbon-rich material. Obviously kills all of the pathogens.
Let's get you some morning calls. First up, Goldman, adding Bristol Myers to its conviction list. The analyst expecting commercial execution and FDA approvals to drive upward revisions and multiple expansion. His second call from the team at Wells Fargo, upgrading Exxon to overweight, $53 price target. The analyst seeing a more favorable macro environment next year with fundamentals improving. And finally, Citigroup upgrading Hilton Hotels to a buy. The analyst saying the industry is on the cusp of a multi-year recovery with the biggest challenges in the rearview mirror. There are three of the calls. The opening bell is up next with Kate Moore of BlackRock. This is Bloomberg.
Bloomberg Television is brought to you by Wells Fargo Corporate and Investment Banking. We're helping customers chart the way ahead in uncertain times.
15th was really the day when the world changed for Zoom. There just started this exponential growth. By April, we had 300 million daily meeting participants. The unprecedented growth I don't think anyone could have ever imagined. And yet, Wells Fargo has met our needs as we've continued to scale and grow. That we have helped connect people during this difficult time means the world to me.
These folks don't have time to go to the post office. They use Stamps.com. All the services of the post office, only cheaper. Get a 4-week trial plus postage and a digital scale. Go to Stamps.com/TV and never go to the post office again.
Introducing the Land Rover Defender. Just the thing for those little everyday trips. Good in heavy traffic.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
An uncomfortable bullishness has been a feature of this market throughout the whole of 2020. It is uncomfortable. Equities are up another 27 points on the S&P 500, up 0.75%. Uncomfortable because the restrictions are moving in the wrong direction. Tier 3 in London, lockdown potentially, a stress potentially in New York. But we have a vaccine, and that gives us the ability to live in the back half of 2021 if you're in this market. For society, you've got to live in the here and now, and I hate to get philosophical, but that's just the challenge for investors at the moment, to live in the back half of 21 with everything that is just not good happening all around you. Futures up 0.8% going into the open. Switch up the board into the bond market. Key 24 hours coming up. Tomorrow morning, retail sales in America. Looking for a downside surprise, maybe. Given the restrictions, we're already looking for a negative print on retail sales. Jobless claims come Thursday morning. They've been moving in the wrong direction. And the Fed, will the Federal Reserve give the green light for yields to go higher at the long end? Your 10-year, 91 basis points. So the FX market, euro dollar 121.53. Crowded trade. Short the dollar, they say. We are just off the highs of the year on euro dollar at around 121.78 intraday for 2020. That's the market action cross asset worldwide at the market desk with your movers. Here's Abigail.
John, let's start out with this morning's big news, and that, of course, is Moderna. Shares are popping higher in the news that the FDA has found their COVID-19 vaccine both safe and effective. They will be voting on Thursday for the emergency authorization that everybody expects to go through. If all goes well, most likely their vaccine will start shipment and distribution later this week or into next week. So that stock up about 0.5% off the highs. Nonetheless, the bulls are there. Where we really have the bulls, Apple up 2.2%. We have Nikkei saying that they are likely to boost their phone production by 30%. GE up 1.3% as Deutsche Bank has raised their price target by 44% to $13. And then Wells Fargo also getting a bullish nod from another bank, KBW, raising their rating to outperform. This stock, Wells Fargo, really up in a big way over the last couple of months on the reflation trade, John, up about 35%. And interestingly, Moderna, flipping ever so slightly lower there. So we'll be watching that all day to see whether or not it's a sell the news event similar to Pfizer yesterday. And then talking about sell the news, John, if we take a look at some of those big IPO movers that had been up so much last week, Snowflake, which IPO'd in September, down 7%. Airbnb, which had doubled last week, giving back 3%, so not a huge move lower. DoorDash also climbed huge off of their IPO last week, up 85% on the IPO, giving back just a little bit, down 1.4%. Investors considering that froth that everybody's talking about, John.
Plenty of froth, according to plenty of people, though the consensus trade is still to buy. The S&P 500 up 0.6%. Information technology on top. We advance about 1% there on materials, up 0.9%. Call it 1 percentage point. Pretty much every single sector on the S&P 500 in positive territory, with the exception of real estate this Tuesday morning. Looking ahead, Wall Street preparing for the year ahead, already establishing a massive consensus trade for 2021.
We remain overweight equities at the expense of fixed income.
The focus for investors is really away from treasuries.
It's cash that is providing you that risk control far more than government bonds.
I would play via equities, and I would hedge out my currency risk.
We're still bearish the dollar.
Sentiment has been built up very, very bearish on the dollar.
This is the same old story that we've been talking about.
You are going to see larger and larger allocations towards equities.
Central bank support has provided if you like, an umbrella.
Investors have gotten a bit aggressive.
It seems to be a consensus view looking outside of core government bond markets.
You have no other choices.
People do feel they have no alternative but to buy equities.
For more, let's bring in Bloomberg's Kelly Lyons. Hey, Kaylee.
Hey, John. Well, the harmony among these strategists is really quite remarkable. Wouldn't really make for a very interesting dinner table conversation, considering everyone seems to agree with each other. When it comes to equities, everyone is basically bullish. Yesterday on this program, I was talking about how there isn't a ton of consensus as to how far equities will run in 2021. Forecasts range from anywhere between 4% and 20%. But the fact of the matter is, John, everyone does think the S&P 500 would end the year higher. On average, they see the index at 40.35. That would be upside of around 10% by year end. That's even more bullish than the strategists were at the tail end of 2017, even with anticipation of tax cuts. Now, within equities, we all know what the trade is. It is cyclicals over defensive, small caps over large. We do all know that story. Now, when it comes to the FX, consensus there as well. It is a weaker dollar that everyone is calling for. And our colleague Cameron Christ put out an interesting piece yesterday pointing out that when you look At the euro-dollar cross, this is the 5th consecutive year that the strategists have expected the dollar to weaken against the euro over the next 12 months. It's actually only happened in 2 of the last 4 years, as you can see here, so we'll have to see if it actually plays out. And it's worth pointing out that the magnitude of the expected drop in the dollar is relatively small. Then in fixed income, John, bearish treasuries is the consensus call. The 10-year treasury yield, which has remained below that 1% threshold for so long now, is expected to rise by about 30 basis points over the course of the year. John, here's the thing, though. The street basically always expects yields to rise. Over the last decade, they have forecasted the 10-year treasury yield would rise every single year. It hasn't happened every year, though, so we'll see if 2021 does indeed bring that, John.
That has been the pain trade in the bond market, that's for sure. Katie Lyons, thank you. Lou Wang of Bloomberg News put this together as well on the equity market. 2 decades. For 2 decades, not once has the consensus been for lower equities. For 2 decades, the consensus has always been equity markets will be higher. Kate Moore of BlackRock weighing in, she writes the following: investors have had an insatiable demand for compelling secular growth stocks and will be hesitant to rotate away from the 2020 winners and into deep cyclical or reopening trades against the backdrop of an even recovery in the first half of 2021 and a long path to activity normalization. The retail darlings within growth and tech will likely remain crowded. Kate joins us now for more. Kate, bit of pushback there. That's refreshing. Let's talk about it. Let's sit on that just for a moment. You think the crowding into tech can persist. Why, Kate?
Yeah, so hello, John. Nice to talk to you today. A couple things I want to point out. So I am in the consensus in believing that equities are going to be the best performing asset class in 2021. I don't think that is, just because we're all in that space, that should be terribly controversial. But there are a couple places where I think, the market might be wrong, or the consensus in the market might be wrong. First of all, it's kind of around the timing of the recovery. And the second is around the shape of the recovery, the second being really critically important. Now, the timing, I just feel like, everyone is expecting as soon as we start getting a bunch of jabs in the arm, we're going to return back to normal activity. And I think we're going to be in very uneven paces across different industries. And everyone needs to be quite measured, I think, about their enthusiasm for some of the travel, entertainment, leisure, deep cyclicals that have been depressed over the course of 2020, and think realistically about their fundamentals. And then the second point is on the shape of the recovery. And this is something I think you and I have talked about before. Everyone wants to go back to the playbook they've had from previous recessions. What did it look like when we came into sort of a better demand and a better second derivative for growth environment? But this is different, right? This is a health crisis. And we've seen some industries get permanently impaired as a result of it. And we've seen an acceleration and an improvement in the prospects for other industries. So I think there's room to own more of the tech stories, the platforms, the software, the digital enablers that have really sort of shown in throughout 2020, and I think are going to be in high demand throughout the course of next year.
Kate, let's talk about the time horizon. You mentioned through the course of next year, but is this a cycle call for you or just the 12-month call?
Yeah, so the 12-month calls are really hard, John. You know this. We all are sort of put into the box of making a full year call as we get
Forgive
into,
me.
Yeah, no, I mean, it's difficult. We have to do it all the time. But the truth of the matter is that, this is going to be a little bit more uneven. One of the things I pay very close attention to is the CFO surveys. And a number of, big institutions do these, gather them across CFOs across a variety of different industries and ask some good questions. There have been some great COVID-oriented CFO surveys. And quite a lot of these are now showing that CFOs across all industries and geographies are not expecting any kind of real recovery or near normal activity into the fourth quarter of next year and the beginning of 2022. So, against that backdrop, that's why sort of the timing is so important, is that, you're going to see some industries pick up off the bottom, but returning to normal levels where you can actually sort of project a sustained revenue growth, it's going to take some time.
On the sustained improvement, I think what you're looking for in terms of gradual improvement around 2 particular sectors, in fact, one, let's talk about it, travel and leisure and entertainment as well, Kate. This idea of this temporary pickup, this gradual improvement and the sustainable, more durable trend as well, where do those sectors fit into that thinking?
Yeah, so I think the preferred reopening trade for lots of investors, I'd say for a number of my colleagues at BlackRock as well, is really around travel and leisure, and in travel in particular. But I think we need to really think about which travel companies are well positioned. And I'm thinking about those that have strong digital platforms, those that enable the consumer to do price comparison shopping, that provide them with flexibility in case there's another uptick in cases or something changes in terms of their own health. And, there are a bunch of digital companies in the travel space that I think are actually quite encouraging. Some of the more traditional travel names, I'm less constructive on, frankly. And, it'd be tempting to say because they're depressed, because they've had a rough go in 2020, let's just buy them back. But they may not be well positioned for the future of demand, especially in a post-pandemic world. So I would tell investors to be much more thoughtful about what you're owning and don't just buy the industry because it's beaten down.
Kate, always great to catch up with you. I love talking to you. Kate Moore of BlackRock. Kate, thank you. Thank you very much. And send our best to the team at BlackRock, please. Let's head back to the market desk and get you some movers. Here's Abigail.
John, well, we have two big laggards and leaders when we lift the surface. We go beneath the surface of the relatively bullish markets here on this Tuesday. Taking a look at Freddie Mac and Fannie Mae, we do have big losses. This as Treasury Secretary Steve Mnuchin has all but ruled out letting these companies be released from the U.S. government, deferring that to when President-elect Biden's administration comes on. That's a bit of a disappointment as investors are clearly selling these shares deeply. Bed Bath & Beyond, on the other hand, up 2%. This after they have sold their Cost Plus stores to a private equity firm, part of their plan to raise $500 million through divestitures. And then Inovio Pharmaceuticals is popping higher as they are developing antibodies for a COVID-19 treatment. But the big winner on the day, John, that of course is Apple. Shares popping higher on that unusually bullish report from Nikkei. Now, wow, look at that, up 3.8%, 3.9%. Nikkei saying that they are going to be boosting their phone production by 30%. Nikkei tends to be bearish toward them, so this is a bit unusual. And you see Qualcomm, one of their big chip suppliers, higher, along with many other of the suppliers. So that is a big tailwind for the stock market today, John.
Abigail, thank you. Coming up, markets anticipating fresh guidance from the Federal Reserve tomorrow, the final meeting of 2020. That conversation up next with Nuveen's Tony Rodriguez. For our audience worldwide, this is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
All they want to say is we're going to keep buying until we're confident that we're on the path to that outcome. So right now they're just saying we're buying assets over the coming months. To me, this is not a big change. I mean, I think this is more about aligning the language in the statement with where markets are already priced and with what Fed members are already saying. So I don't envision that this is any big change forthcoming from the Fed in terms of guidance.